All right. Good morning. How you doing, everybody? Welcome to Stock Markets with Bruce. It's your Uncle Bruce here for a Monday morning. How was your weekend? Welcome one, welcome all worldwide to this channel where we talk about the stock markets in plain English, and we got some plain English in to do today. There's a lot to talk about, lots to try to figure out. Speculate on and wonder about, try to explain the unexplainable, whatever it might be. Hope you're doing good. It's nice to see you all. The markets are in the red this morning from what I can tell you, pre-market. I'm not sure if it's a very deep red, long lasting, but it looks like we're going to start with a bit of a dip to start the day. The Dow down 150 points on the pre-market. Not a big deal here. It's not even half a percentage point. S&P down 16 points. NASDAQ down 21. But the news this morning is percolating here about a hedge fund and banks and margin calls. And I've been getting a few comments and questions about this over the weekend, and I did some more digging this morning, and I thought I would lead today's show off with this story because the funny thing is there's this thing. There's always this thing, and there could be this thing with regards to how GameStop will do because of this margin call scenario. And I'm going to try to explain this to you so you kind of grasp where I'm coming from and why I kind of extend out this story a little further. So the big news is on Friday, it seemed that on Friday, a hedge fund, which is apparently called Archegos, something like that, Archegos. This hedge fund got a margin call, and they had a number of their bankers tell them, you've got overexposure in the market. We need you to unload stock. We want to cover your exposure on stock. And I'm going to guess that this didn't happen all at the same time Friday morning. I have a suspicion that all week long that this was building, and that this was a situation where a hedge fund had borrowed money from a number of financial institutions that were willing to lend the entity money. Let's not pass this over too much. Banks were very eager to lend money to this group of this particular group of people inside this particular hedge fund, and it's possible that the hedge fund has assets in the U.S., assets in Japan, assets in Taiwan, assets in China. In other words, they deal with a number of brokerage firms around the world. They have accounts all over the place. They have assets spread out globally rather than just in one office, in one city, in one place. And it's also possible that they were leveraging their portfolio more than one time. And this is where it gets kind of interesting. And I'll bring it all back to GameStop in just a second, I promise. And it seems to me from this, humble, simple outsider sitting in Creston, British Columbia, 3 miles north of the U.S. border in his living room, I'm reading more and more about it, hearing more and more about it, and it looks to me like what was going on was this company was able somehow to borrow money against money that they had already borrowed for assets they'd already borrowed money to buy. So whether one bank lent them, $500 million on top of the billion they had already, and then they were able to borrow more money on the now $1.5 billion of assets under administration, and then they were able to borrow $1 billion against the $3 billion under administration, and another $1 billion under the $5 billion. This is the leverage factor, and if you have a crafty enough group of people desperate enough to try to make a big score, and remember, hedge fund managers and operators of hedge funds usually work on what we call a 220 arrangement. All right. By the way, thanks to Matthew for being here, buddy. Thank you for coming in. So they'll work a deal where all the money they manage, they get 2% fees of the value of the portfolio. Whether it goes up or down is irrelevant, and it's charged monthly on a 1/12 basis. You take 2% divided by 12, and every month you charge 1/12 of 2% on the value of the fund. So the more your fund is carrying, the more fees you can generate. That's one. Two, 20% of profits. So if your fund at the end of the month made $1 billion in profits, 200 million in profit sharing goes to the fund manager. And this might be done on a quarterly basis, which is why this Wednesday is so important, or done on a monthly basis. However, these funds work the deal. Every mutual fund, every hedge fund has its own separate arrangement with its own hedge fund investors. And this is a private arrangement. These are private contracts. They're not for public disclosure. No filing is needed to be done at the SEC. There's no reporting to any stock exchange. There's no reporting to different bankers. This is just a private arrangement between investors and administrators of a privately run hedge fund. And some funds are based in China, some are based in Japan, some are based in Vietnam, some are based in Switzerland, some are based in the Cayman Islands, some are based in Manhattan. They're all over the world. And some are very much running in tax-free jurisdictions for obvious reasons. If whatever profits are made are not taxed, and as long as those funds stay offshore and other offshore entities, no tax. There's a huge incentive for hedge fund managers to make money and grow their assets under administration. So coming back to these guys, it's entirely possible that these individuals and these groups, sorry, it just hit my table, have been leveraging their mutual fund, or their hedge fund, for years, months and years. And banks are so desperate to do business because, as you may have noticed lately, I've been talking about how certain companies can raise money from bond offerings for zero interest. How do banks make money? How's that going to happen? If you're a bank and you lend money to people, and corporations can go to the bond market and borrow money for zero interest, where's your upside coming from? Well, your upside is coming from alternative places to lend out money. And if you've got an eager borrower, like a hedge fund, that is showing you a statement that you believe is genuine, that says, we manage $8 billion in assets, we're looking for $1 billion loan. The bank's going to go, hey, it's only 12% of the fund's value. Yeah, let these guys borrow $1 billion. And in some cases, they probably started off with $300-400 million at a time, and then they just slowly added to it. They added 100 million here. The bank would call them up. So you need any more money? Well, yeah, we'll borrow another 200 million. We'll just add it to your line of credit. Go ahead and write checks. And so bit by bit, from institution after institution after institution, this fund, and perhaps dozens or hundreds of others, and that's the speculation why I want to get you to understand here, a zillion of these funds have been borrowing tens of billions of dollars for leverage to buy and sell stock in the open market, buy and sell bonds, buy and sell credit default swaps, or whatever else they're into, real estate, it's all leveraged. And if your bank isn't an aggressive lender, you don't lend out money. You don't lend out money, you don't bring in interest. You don't bring in interest, you don't pay the bills. And then you, as a loans officer, corporate loans officer, might find yourself out of a job with a guy who's more eager to lend or able to find business to lend to. And so the thinking at the banks has been, well, hedge funds are the perfect guys to lend money to. These guys are liquid. They're into the markets. They can liquidate out anytime they want. If we tell one hedge fund we need $100 million down on your line of credit, a couple days later, $100 million, no problem. We're managing billions. We'll make a few adjustments. No big whoop. So it sounds great, looks great, feels great, is great, except when it's not great. And it could well have been that a single banker in the chain of all the banks that this company was using for loans uncovered an anomaly. And it could have well been that, yeah, you guys are running 10 billion or 20 billion under admin. Yeah, but my little sources are telling me you guys are exposed to a bunch of banks, to a whole bunch more money than we thought at this bank. And so this bank is going to call in, we're going to call in $500 million of your exposure. In other words, you owe us, you borrowed $500 million, we want it all back, and we're going to give you 72 hours to cough it up. It all depends on the covenant the deal that was made between lender and borrower. And if the bank has the right to call the money within 24 or 48, 72 or whatever hours, that's the deal. And so the hedge fund has to come up with cash. Now, one way to do it is you pick up the phone to Credit Suisse or to Deutsche Bank or whoever your other bankers are and say, we want another 100 billion on that loan. Oh yeah, okay, go ahead. And then we want 100 billion from these guys, 50 billion from those, and they're cobblestoning a 500 billion together without selling a single stock. And they're just bringing money in, and they're transferring 500 million over to this banker, and the banker's paid off, and now all is well, as long as the banker doesn't talk. If the banker shares his or her concerns with another institution, or the mere fact that a bank is doing some due diligence that's being picked up on by other institutions, they're going to wonder why so-and-so bank doing all this due diligence on this blah 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 hedge fund. What's the big deal? I thought those guys are fine, or they owe us $1 billion. They've never missed a payment. They always pay their interest payments. We never have a problem with these guys. Why is so-and-so? The rumor has it that so-and-so pulled their $500 million loan with these guys. What's going on? And bankers are fidgety that way. They have feelers out everywhere, and they've got the pulse of the market right under their fingertips. They're very, very sensitive, and they really feel the slightest shift in anything. 1/100th of a percentage point move on the 10-year U.S. bond, like we saw in the last month or so, 1/10 of 1% move in a 10-year U.S. note, that can upset the apple cart by 600 points on the Dow Jones Industrial Average in an hour. I mean, these guys are finicky. So to hide and try to ignore this kind of a movement, tough to do. So institution number 2 calls up and says, "Yeah, listen, we gotta take it from $1 billion down to 500 million over the next 3 days or 5 days." And all of a sudden, these calls come in, and this entity is all of a sudden going, "We have too many holes in the dike. Water's leaking in, and we haven't got enough fingers to plug all these holes anymore. We got to start liquidating. We can't just borrow our way out of this problem. We don't have enough lenders calling us saying, 'Hey, you want another billion? Want another $500 million?' We have to literally start liquidating stock." And so that process begins. And like I've told you before, many a time, I've mentioned this to you all. Why is it that GameStop shares sometimes will trade up $15 in a day, $20 a share? They'll be up $20 a share. And then within 30 minutes, that stock will drop $15 in 30 minutes on a 500,000 shares of selling, because someone who's short wants to keep that stock price down so that they don't look as bad as they've been looking with that stock moving up. And if they can drive that market down by being able to borrow 500,000 shares at a very low interest cost, they'll literally borrow stock if they can get it at a low rate, and then hit the market with that stock and drive the market down 10 or 20 or $30, or they'll do it 5 minutes at a time every hour or every half hour. They'll just wait every 30 minutes, hit the market again, and make your GameStop go down, a little come up, a little go down, it'll come up a little bit, go down. It just looks terrible. If you're short, that's what you want to do. And if you're able to borrow, that's what you'll do. And then you're carrying a larger position, a larger short position, and all is well, as long as the game can continue. However, when this outfit over here on Friday, the word came out that they had to sell upwards of $10 billion of stock to cover margin calls that were coming in. Again, bankers calling the company saying, "You're overextended. We want our dough." These guys now had to sell stock in a hurry. And as I was saying earlier with GameStop, certain sellers in GameStop are selling at any price they can get as fast as they get because they want the stock to go down and make it look awful. Others who want to sell GameStop that actually need to raise money, not to drive the market down, but to raise cash, they will very carefully sell GameStop or IBM or a hedge fund or an ETF or any asset they have. They will slowly piece it off as to not raise any suspicions with any other institutions, bankers, hedge funds, floor traders. They're trying to just calmly transact business as if nothing is the matter. But in reality, these guys have been called into their offices. Desk traders have been called into their managers' offices before the opening. We have to liquidate $5 billion worth of stock by lunch. You remember The Big Short, the movie The Big Short? We have to liquidate 97% of our positions by 11 o'clock this morning, and the selling you're going to do is going to be brutal, one-sided, no other swap arrangements, and you're going to ruin relationships with traders around the world. You're about to kill your own careers. But by doing this transaction and dropping everything off like we're telling you to, each of you will get a $2 million bonus to, quote, lose your jobs for a while. So, you might not be hireable for 3 or 4 years, but you got $2 million to live on in the meantime. Get the job done. Well, here, this hedge fund probably had a few days to liquidate stock, and they were managing to do some liquidations. But the word probably got out like a domino effect between banker and banker and banker, where by Thursday or Friday morning or Wednesday afternoon was sometime, they may have had the calls from all their institutions saying, we want all our money by the end of business Friday. And these guys were still sitting on maybe 25 billion in stock because they may have had 5 billion of their own money. They borrowed 15 billion from banks, and then they leveraged that through brokerage houses. I mean, they were just leveraging. They might have been running a $40 billion portfolio. Now they got to liquidate a whole bunch of portfolio because they can't borrow a dime from anyone. They're now a cash account, a client. These guys are in big trouble. And what likely happened, from what I can tell, is they started to sell stock. It went down in value. Thank you, Florian, for becoming a member, by the way. The stock that they were selling in 5-10 different companies started to drop. And as the stock dropped, their borrowing power dropped, lending availability, causing this chain reaction of more selling to get out. And in effect, this hedge fund has probably been liquidated entirely. They may have had their entire portfolio liquidated over a 2-day period, of which Friday was the culmination of most of it. And the banks are now coming out going, yeah, it looks like we're on the hook. I think Credit Suisse is saying, I think we're on the hook for $1 billion. Nomura Bank out of Japan, they think they're on the hook for $2 billion that these guys can't pay because the money they had, the $5 billion they had, that's all their partners' money and their own money that maybe funded the company for $5 million, the hedge fund, that may have been eaten up already with the losses. And the losses are another $5 billion. And now there are banks out there who are like musical chairs. The lights came out on, and there's 2 chairs left, and there's 6 banks standing around, and 4 of them can't find a place to sit down. And all of a sudden, we got ourselves a problem, Houston, and it's a multi-billion-dollar problem. Why do you have to care? All of you wonderful people out there, why should you care about this? What do you need to worry about? So what, Bruce? Okay, so some hedge fund got their brains blown out. Whoop-de-doo. What has it got to do with my GameStop shares? After all, you always talk about GameStop. Why should I care about GameStop if this is happening? Oh, I'll tell you why. I'll tell you exactly why. Because when banks sense trouble in the countryside, they see one pop up like this, one hedge fund pop up, they ask, how many more are there? How many others? What's our book look like? What's our lending book look like? And these banks now begin all weekend long, believe me, that no one's gone home. No one went home Friday afternoon. They were up all 48 straight hours. Every bank around the world that lends money to hedge funds, to stock brokerage firms, they're looking at their books and they're asking themselves, who's the most over leveraged and how much? And what issues are we talking about? What stocks are the most over leveraged stocks out in the world? What commodities are the most over leveraged? Oil, corn, pork bellies, U.S. treasuries, corporate bonds, stocks. What have we got? Where are we on the hook for the most leverage? And is there a pattern here? Could it be that this fund right here was the worst run of the bunch, but there are about 25 other funds that are almost as badly run or almost as heavily leveraged? And we need to get to the bottom of this. When we lent $2 billion to those guys, did Nomura and Credit Suisse and Deutsche Bank and Citibank and Morgan Stanley, did they also all lend $2 billion to these guys, thinking that they were the only ones lending them $2 billion, or they thought they were bank number 5, but there are actually 20 banks? What's the story here? How bad is this iceberg? Because we see the little tip sticking out of the water. What's underneath the surface, and how bad is the surface? And when that comes back to GameStop, what stock in the stock exchange have I been kind of mentioning to you guys that has been the most over leveraged stock on the market with respect to short sales and undeclared short sales and failure to deliver stock. What company has, I don't know, about just under 70 million shares in its existence, but in reality, over 200 and something million shares actually trade all the time? What's that one called? I wonder. It's Flame Pop? No. It's Lame Job? No. It's GameStop. That's right. Sounds like that. It's GameStop. GameStop is the most over-leveraged market, as far as I'm concerned, relative to its size out there. Now, is GameStop a multi-trillion-dollar problem? No. Even with 200 million shares floating around in GameStop at $180 on Friday's close, that's $36 billion. It's chump change. And reality is that 70 million of those shares are truly held by real investors, if not 160 million are truly held by actual buyers. You and pension funds and mutual funds and ETFs and index funds, you all own this stock. Unbelievable. The problem with GameStop has been, and my contention, that for every share that's legitimately out there from the company, there are 2 shares that have been artificially created and are trading out there and that are leveraged. And of the 160 million that are held by true blue long-term investors, 90 million of them don't exist because there's only 70 million out there. I mean, it just adds up to leverage over leverage over leverage. So I'm wondering if today, tomorrow, Wednesday, the end of the quarter is Wednesday night at the close. Don't forget that date. We're coming to the end of the first quarter, and I think we might be in for one heck of a fireworks show across the entire market. And the question with GameStop that I have, and what I'm wondering about is it possible that a whole bunch of hedge funds out there who are doing nothing wrong, who have not over-leveraged their companies, have not got a problem with regard to how much money they owe versus how much they manage, still will get caught up in this vortex of conservatism with regards to the banks pulling in a little bit? And could there be pressure on any institutions out there holding anything on leverage, on margin? And GameStop is one of the most over-leveraged companies on the short side in the entire market. Because again, there are, I think, over 200 million shares floating around out there when only 70 million actually exist. So is it possible that today, tomorrow, Wednesday, month-end day, and Thursday and Friday, could there be certain hedge funds and brokerage firms who borrow money on behalf of their clients? Because remember, this is a chain deal, okay? You got the client with assets. The client borrows money from their broker or from bankers themselves, and then go to the broker with a pile of cash and then leverage that on top of everything else with the broker, who is borrowing money from all their bankers and pals, some of which are the same house. I mean, you got Morgan Stanley Banking and Morgan Stanley, the trading division, and you got one borrowing from the other. And then Morgan Stanley is borrowing money from all kinds of hedge funds, pension funds, mutual funds, offer them all kinds of interest rates for money they need for their clientele to do business. This is a leverage business. And if we're looking at a scenario where in the next few hours, the next few days, even GameStop shorters are going to get a call, and their broker's going to say, look, we don't have a problem with your account. You're fine. We love you. You love us. It's a great relationship. But you know this little thing, you know that thing that happened over there with that company that got blown out the other day? It's causing a bit of a headache in the biz, and we got to kind of pull back our leverage a little bit by like 10%, if you don't mind, can you make some adjustments? I'm wondering if all of a sudden, collectively speaking, 20 million shares of GameStop has to be picked up, has to be bought back to lower the short leverage on the stock, because entities borrow money to go long and entities borrow money to go short. Leverage is leverage. I don't care how you play the market. Leverage is leverage. So some companies make money when stocks go down. Some make money when stocks go up. And in the case of GameStop, there is a massive short issue position here that we've all been trying to figure out now for months, going, how can it be that there are all these shares in existence from these mutual funds and hedge funds and pension funds when they can't possibly own that many shares. How can they own 160 million shares of stock? There's only 70 million actually existing. What? And then why are all these short failure to deliver notices flying around on GameStop all the time? And what's with all these naked options being written by the Chicago guy? There's just an unbelievable amount of stock around here, which justifies why it can trade 30 million a day, 40 million a day. It can trade 40 million every day, all the time. How do they do that? How can they trade 3/4 of the company every day? I don't see every shareholder flipping their stock every second day. I don't see it happening. So it has to be, well, there's been more creative. Pay for order flow. I come back to how the brokers make their money. Brokers make their money on volume of trading. And if they can create more volume trading on stock, they make more money. And if you can take 70 million shares that actually exist on GameStop and turn it into 210 or 250 million shares and have 40 million a day trade hands, you got 40 million shares being purchased and 40 million shares being sold to make these 40 million trades happen. You can't have volume without a buyer and a seller on each side of any trade. But if that many shares actually transact, there's a lot of commissions coming out of the bottom of that little slot machine. Pennies per trade, pennies per share every time they change hands. And so the brokers are addicted to volume. The bankers are addicted to value. And so you've got a disconnect. You got one group that just wants to trade a bunch of stuff, and you got another group that wants to make sure the asset values are there to protect their liability, their exposure. And you got the hedge funds who have all kinds of interests, like the more we manage, the more we get, because that's our 2% under management deal. And the more money we can make, the more we can trade, the more money we can make, the more that 20% comes to us. And of course, the investors into hedge funds are go nuts. If we investors give you $3 billion, but you can turn that into $15 billion of assets being turned around, and you make 10% a year on $15 billion, you're making 1.5 billion profit on 15 billion, but in reality, we only gave you 3. You're making 50% on the money we gave you. The rest is banker money. You pay the interest off to all these guys, and out of the 1.5 billion in gross profits, maybe 1.3 billion is net, and you get 20%, you guys. So that's 260 million for you. Let's call it 300 million. We get $1 billion. We, the investors, make $1 billion from this hedge fund, and we only gave them $3 billion. We're making 33% on our money. Good stuff. That's the game. It's a leverage game. And don't be surprised if people who invest in hedge funds borrowed money from other assets to do it. So you have a multimillionaire with a nice house in Beverly Hills worth $4.5 million. They've borrowed $4 million on a $5 million house. And where is it going? It went into a hedge fund because it's returning 33%. Then why wouldn't they do that? And if they can get a 30% payout every year, or they take half of the profit out in cash, they take 15% of their $4 million, that's $600,000 a year coming out of the hedge fund, cash. They're paying mortgage on the $4 million. No problem there. The payments are going to be $250,000 a year. They got $400,000 just coming. They got all kinds of cash to pay the mortgage and leftover money for the new Bentley and the nice second house in Aspen, and maybe the jet membership with NetJets. And the life is good. It's a leveraged life, but it's a good leveraged life. And so as long as it works wonderfully. But coming back to you guys and GameStop, it's one of the most over-leveraged stocks in the stock market. But on the negative side, on the downside, which is great, because it means for you that, is it possible that in the next 3 or 4 days, the banks are going to pull their margins in and cause hedge funds and shorters, whoever they are, to deliver your paper to us? We want the paper now because we want to deleverage somewhat what we have. So you have 1 million shares short. We can only carry it for 800,000 short. Pick up 200,000 shares. Doesn't sound like a lot, but you multiply that by 200 hedge funds or 200 other individual or whatever the number is, and you multiply it all out depending on how big and how small they are. Millions of shares of GameStop are needed to be purchased to deleverage the GameStop short position. Well, we've been counting on this forever. We've been counting on this since January. We saw it happen to a degree in January, went up, came back. We saw it happen again a few weeks ago, a little bit, and then come back. Now we're noticing all kinds of shenanigans going on, and we're asking ourselves, when is this over, and when is this this thing going to go? Because from what we understand, the Reddit followers, the Wall Street Bet readers, the GameStop stock Reddit followers, add them all up, you're dealing with 10, 12, 15, 20 million readers. Then how many people around the world don't follow the Reddit and blocks Wall Street Bet? They just follow the internet for independent bloggers and vloggers about the GameStop scenario. And then we all look at the company and go, well, wow, they're getting rid of 8 directors. They're going to bring 8 new directors in. Who are these 8 new directors going to be? Could one of them be Elon Musk, or could they be like an Elon Musk lieutenant? Someone from the board of directors of Tesla could become a board member of GameStop. Could it be that the arrangement they have with Microsoft is so strong that we don't even know how strong this is, because we know there's an arrangement between the two where Microsoft is paying royalties for online sales of their Xbox system to GameStop, perhaps with games and everything else. We don't know. There's a top secret deal that has leaked out. Could it be that a board of director member of Microsoft joins the board of GameStop? Is this why 8 are out, and the 8 newbies coming in are from such high positions elsewhere that it transforms the look of GameStop? Because your board of directors can say everything about the validity and the solidness of your company. And so if you've got deals with let's say you bring in a director from Goldman Sachs to be a director of your bank, of your company, and you bring in a director of a major game creating company in, or you bring in a director from Sony because you're handling the Sony PS5. There's no end to what the possibilities are. The street is looking at all the indicators of GameStop. Apart from the short situation, the over-leveraged hedge funds and all this stuff, they're also wondering about these 8 potential directors. Who are these people coming in? Are they all friends of Mr. Cohen? I would say yes. I would guess so. And if all of them are loyal to Mr. Cohen and they've bought into the story, like Mr. Cuban comes in as a director. I mean, think about this. Just the PR side of it. Just that. You bring some of these people of that kind of caliber, or connected to that kind of caliber of character and free enterprise thinking and connections to connections to connections to connections. You all of a sudden realize, oh my God, these GameStop guys, holy moly macaroni, these guys are deep into Wall Street, deep into high tech, deep into the fangs. There's all kinds of potential here. And what if they bring in the directors from overseas, like Tencent? Or they bring a director in from some of the biggest Chinese-run entities. I mean, I don't know. It is so much we're about to learn, because between now and June, you got the annual meeting, and you got to vote in the directors. Who is the new slate of guys, girls? Who is it? There's a lot happening here, and hedge funds. Well, let me back up. If bankers who have lent money to hedge funds who are short all kinds of GameStop, so go back. You get the hedge fund, the broker, the banker. Back to the banker. The bankers out there get the impression that we're hearing rumors that 5 of the 8 directors that Cohen is talking to could, any one of them coming on board, the stock could double. If it's a Tesla director, or if they change out the management group in the investor relations department and they bring in a senior investor relations person from Tesla who is integral with Mr. Musk to catch the short sellers of Tesla in a real bind and help fund the company as it went to $900 a share to $4,500 a share, actually pre-split. If the thinking by the bankers is, oh my gosh, we like the management moves these guys are making, but we hate it because we are upside down on this stock with our hedge fund guys. We know how leveraged these guys are. We know the company is leveraged up to the nines as far as how many shares are out there and shouldn't be out there. And if all of a sudden the street's going, wait a minute, what are we doing on the wrong side of this market? We gotta pare this back. And they try to just do it a little at a time. without kind of, advertising it, great. But the problem is, if this hedge fund over here just had its brains blown out for $10+ billion, and banks are announcing multi-billion-dollar exposure losses to this one hedge fund, and they weren't short GameStop, as far as I know. They weren't short any. What happens now? This is crazy. I mean, on GameStop, if you create 50 million shares of demand because of a short squeeze callback, we want you to deleverage, 50 million shares at GameStop have to be purchased in the next 24, 48 hours before the end of the month, because we don't want you carrying this position between now and the end of the month. We, the bank, have to report to our shareholders. We, the bank, have to report to our bosses, and we don't want to be on the hook with you guys on the hook for an over-leveraged stock when the rest of the market is being called in. I'm wondering, how far does this go? Well, it can go very far, very fast. And right now, we just moved up $5 a share from 177 to 182. I'm not reading anything into this. I don't know what I'm yapping about has anything to do with this market. But I'm telling you, and I'm speculating, and I'm thinking, I know how these bankers are. They're really twitchy. And an over-leveraged account can turn into billions of losses. And too many over-leveraged accounts, tens of billions. Gurmak, thank you for becoming a member of this channel. Glad to have you aboard here. We could have a situation here where there's 100 banks around the world, Dubai-based, Hong Kong-based, Tokyo-based, Shanghai-based, Seoul, Toronto, New York, Berlin, London, the globe, man, the globe. And these guys are going, I'm not going to be on the hook for this thing. I'm not going to be on the hook with these hedge funds for how many billions have we got on the hook with these guys anyway? And they're doing their numbers, and they're going, well, there are 15,000 hedge funds around the world, and we deal with 500 of them. How much do they owe us? Oh, well, they owe us collectively $200 billion. How much of that $200 billion is in stock? 80 billion. How much is in bonds? 80 billion. How much is in real estate? 40 billion. Okay, we got 80 billion in stock exposure. We just saw one get blown out the door Friday. Now for 10 billion. This caused Viacom and Discovery and other stocks to tank, to have a terrible day. If it's only one, okay. But if there's dozens more of these guys, collectively, we have 12 hedge funds that have to be liquidated to the tune of 5 to 10 billion each. We got ourselves a $50 to $200 billion problem globally. How much of that is ours? Oh yeah, well they owe us $12 billion. We have 12 billion exposure. Well, if they all get liquidated out and the markets take a hit because of it, how much exposure do the rest of our clients have? Oh, well, yeah, that 80 billion, we're down to 68 billion now. We're half of that could be in trouble. These bankers are going to go, whoa, everything is blown out of proportion here. We don't care that the markets are at all-time highs. We don't care that Biden just put together a $1.9 trillion speculative deal. We don't care Ford can raise money for zero interest. We don't care that interest rates are historically low and inflation isn't a big deal. We care about our exposure to our clientele and our clientele's exposure to a market which is being hit by a hedge fund that maybe borrowed money they shouldn't have, or hoodwinked some bankers, or however it happened. However it did, it doesn't matter. The bottom line is bankers are the last guys holding the bag when things go awry. Now, banks have insurance to cover against loan losses. Don't worry about the bank going out of business. They won't go out of business. They have insurance. They might have a 20% deductible or a 10% deductible. They can handle that. But it's the insurance companies. Well, how are they funded? Well, they borrow money from banks. Insurance companies are leveraged as well. Welcome back to 2008, the housing crisis. Nico, thank you for becoming a new member of my channel. They're leveraged, and they're mega leveraged, and there are bettors, just like during the housing crisis, the guys who buy these credit default swaps, and they're wagering on whether these guys can pay off or not. And they're leveraged to the nines. And if they can't pay off, these folks make 10 times, 20 times, 50 times their bet. And believe me, there are a zillion hedge funds in this game too, and they're betting on this part of the market. We're talking about leverage on leverage on leverage. And what I'm coming back to on GameStop is the reality on GameStop's leverage is most of you out there own your GameStop shares, bought and paid for with cash. Because when the stock went to $300, $400 a share in January and the brokerage firms weren't allowing you to buy it for a couple of days, and then they allowed you to buy 2 shares a day or 4 shares a day or 5, you could only buy it with cash. They weren't letting you buy any GameStop with margin, not on the way back down. And then the lower it went, it was strictly cash buys only. And so as all of you folks averaged your positions down, a lot of you did, you were buying with cash. I have enough money for 4 more shares. I'll buy 4 more shares. And you've been doing this ever since. Ever since the stock has been doing this up and down, up, you're picking up stock on the dips and you're buying cash. Very few of you are margining. And so you're the strong hands, which is good. The bad news is that for the hedge funds, they're the ones selling the stock to try to drive it down, and they're borrowing money and stock to drive the market down. And they're the ones who are creating the exposure problem. And this is where there are bankers out there getting more and more nervous. Jay Ray, thank you for becoming a member of this channel. Nice to see you. Welcome aboard. And so I'm sitting here going, what are the odds of the stock going down or going higher? What are the, well, if most of the folks who own the stock don't have margin against it, there won't be any margin calls. But if most of the folks actually who play this market are playing it short, and I think there are some major players, a lot of players who are short, they're leveraged short because that's the only way you can be short. You cannot be a short seller with all the stock in your back pocket. You don't have the stock. That's the point. You're selling stock you don't have to buy it back at a later time at a lower price, and you're prepared to pay a fee to be short and to carry the short position, and you're trying to find a broker who will help you borrow the stock so you can hold it. Then you're paying a fee to carry it, and you're paying interest to the banker out there for the short position you're running. On and on and on. It's leverage. There's leverage. It's leverage. It's leverage. There's more leverage against the stock than for the stock, and the losses of a short seller can be limitless. Whereas this hedge fund the other day on Friday, they had to get blown out. They sold stock into the market to recover cash without getting it all back. But the reality was that the shares could only go to zero, whatever they were selling. And the rumors were that on Wednesday already, Goldman Sachs and JP Morgan and others were already offering large blocks of stock of certain companies to all their trading partners around the world at discounts to the market. And there were very few takers. And that's why on Friday it all imploded, because when you get a phone call from a brokerage house offering you 500,000 shares of company blah at 5% below the market price, if you take it all, we'll give you a deal on it. You mention this to your fellow players, and within 15 minutes, the street knows that JP Morgan is trying to offload this block of stock at a discount in this company. And that company shares immediately reflect the price on the open market. Over here on GameStop, I'm kind of wondering, is it possible that as this week rolls along, there might be brokerage firms looking to buy 500,000 shares of GameStop, or 1 million shares of GameStop, or 600,000 of GameStop, or 2 million shares of GameStop. Blocks of GameStop are needed by firms to cover client short positions, and they're willing to pay 5% more than the stock's trading at, or $5 more, or $2 more. Stock's at 180, 190 right now. Is it possible you can buy a block of you can sell a block of stock, because they're looking to buy, so you got to sell. They're saying to whoever's listening, if you've got 200,000 shares at GameStop in a block, the stock's at 182, we'll give you 185 for it. Are you open to that? You get that out on the street, and the whole market goes, whoa, short squeeze, and it's millions of shares, it's tens of millions of shares. Of course, it's tens of millions of shares. There are over 100+ million shares created that don't exist. Of course. That's what I'm wondering about. That's why I'm here this morning. Bob Barker. Thanks, Bob Barker, love all the work you did on the Price is Right. And way to go, buddy. Thanks for becoming a member. Nick, thank you for being here. Why not just give shares to people, get cash? 20 million, example, 20 million of these Wall Street shenanigans. There's all kinds of ways to do this. I like the idea of doing nothing. I like the idea of making the street scramble and just letting this thing go uncontrollably to like 500 share, and then we talk. I like the idea that GameStop doesn't accept any phone calls for any deals until it's 500 a share, and then we'll talk about maybe offering some stock from our treasury to help alleviate the issue. But at our terms, because we're not interested in selling at 180. We're getting kicked around by you guys all the time. And you guys, the guys that we're supposedly helping out are the same guys who putting shills out there. I'm not a shill, by the way. They tell me I am, but I'm not. They're putting shills out there to downplay how bad GameStop is. I think the company's kind of going, until those guys stop that stuff, we're not interested in talking to these guys. So let it trade at 180, 85, 190, 195, 200, 215, 230, 240, 260, 280, 310, 343. Let it. It's already been to 480, whatever. Why don't we go back there? Then we'll talk. Because you know our number, but we also know our position. We're a little upset here at GameStop. We're a little upset. Kind of interesting, isn't it? It's going to be an interesting opening. It's going to be an interesting few days. We are opening in 15 minutes, and this story is gaining traction. The story of the over-leveraged hedge funds. How many more are there? And this is going to take a while to sort itself out. And the over-leveraged market, it's going to take a while to sort itself out. And have I not been mentioning from time to time with some of you out there how this failure to deliver thing is actually a way to short the market without declaring a short? And isn't that a form of leveraging against the market to offer liquidity? The whole SEC argument is it's good for liquidity. We're letting people trade more actively. It's better for the investor. They can buy and sell more easily, larger blocks of stock. Or do we think, well, yeah, but that means that there's $3 of money in GameStop when those $3 should be in one stock instead of three stocks. So right now at 181, the stock should be at 543. That's really where GameStop should be right now, because that's how much money is in the GameStop long position. There's $543 a share right at this second in GameStop shares. But because there's triple the number of shares trading hands, it's only trading at 181. That's how this is working. That's my thinking. Now I'm wondering, what's the story on Apple? What's the story on Microsoft? What's the story on Netflix? What's the story on all S&P 500 stocks, all Russell 2000 stocks? How many shares are out there trading that don't exist? And the SEC knows it, and the clearinghouse knows it, and the bankers are beginning to smell problems with the tea. We got ourselves an issue here that is not a $10 billion problem. No, not it's not $10 billion. Josh, thank you for coming a member of this channel. And David, thank you. Thank you for joining my channel. I hope you're finding this entertaining and useful. The markets are trillions of dollars in value. The stock markets, they're massive. Hedge funds, 15,000 hedge funds, they control $4 trillion approximately. $4 trillion. So there's lots of dollars out there. Okay, and that's the good news. The bad news is that there are trillions more lent against that money, and it's lent by hundreds of institutions and pension funds and mutual funds and private investors who are lenders. And yeah, you can borrow, like Bank of America needed money back in 2008 during the crisis. I think it was Bank of America. And they picked up the phone and called Warren Buffett. He was having ice cream with his grandkids at a McDonald's in Omaha, in his hometown there. Was it Omaha? Anyway, the Oracle of Wall Street. He got a call from the chairman, president, CEO of Bank of America. They wanted to raise money fast, and he said, "How much do you need?" He said, "Oh, we're looking for $5 billion." He says, "I can give you $5 billion for in a preferred share offering. Give me preferred stock, 10% dividend, convertible into common at today's price, which is $5 a share, good for 10 years. Deal. Over the phone, 30 seconds, done." Bank of America just brought in $5 billion cash now from one guy. And that alleviated concerns with respect to Wall Street's wonder about, will Bank of America come out okay on this housing crisis stuff? Oh yeah, Buffett just gave him $5 billion. Oh yeah, okay. buy the stock. And they did. People bought that, went to 10, 15 bucks a share almost within a month. And Buffett's laughing, going, yeah, I can get this at 5. I'm getting 10% interest on my money, and I can convert my $5 billion into common stock worth $15 billion in like 3 weeks. Now, that's how you make money, because when you have it, you can lend it and you can call the shots. And he did. And that's how it worked. But both parties were happy with the deal because Bank of America alleviated a run on its company, and it was able to just, continue business as usual with changes and adjustments. Today, here we are with a multi-trillion-dollar stock market, a multi-trillion-dollar leverage scenario market, 0 interest rates, very, very low interest rates, money sloshing around all over the place. But eventually, the loans have to be paid back. And the loans should be, at the current moment, should be covered with an asset that is worthy of the loan itself. So if you're taking a car loan, don't trash the car. If you're taking a loan on your house, as long as the equity in your home is there, you're okay with your mortgage. Well, hedge funds who borrow money against stock positions to either go long or to go short, they have to maintain a certain value of their portfolio to stay out of trouble. And so obviously what happened last week with this Archego, what they're called, they were over leveraged and they got caught with their pants down. And my hunch is that a banker or two uncovered a Ponzi scheme or a partial over leveraged scheme, whatever word you want to use, and they called in their loans. And it started a cascade of problems for that fund, and that fund is now essentially out of business, essentially. GameStop is over leveraged on the short side. No question about it. No doubt about it. 3-to-1, minimum 3-to-1. So if the shares go to $250 today, they could still go to $750. If they go to $400 a share this week, they could go to $1,200. It's a 3-to-1 over leverage scenario, and you cannot reverse this in 15 minutes. There's no way, no how can a buyer come into GameStop needing 5 million shares in a hurry and be able to cut block trades to just buy up 5 million shares in 15 minutes. It's not going to happen. No, they're going to have to go into the market and bid up the market. And bidding up the market means more people jump into the market because they smell opportunity. There you have it. And there it feeds itself. And that happened in January with the first short squeeze that we saw go through. Happened again a few weeks ago with a first little run. And now the realization is coming out that, oh my God, there's problems in paradise. If everything was perfect, and if the markets are at all-time record highs and interest rates are at all-time record lows and inflation is under control, why are there hedge funds in trouble? It doesn't make any sense. It's kind of like A Few Good Men. If there wasn't any danger to Santiago, why did you have to get him off the island? You said yourself, Colonel, that he wasn't in danger. You said no one was to touch Santiago. Why was Santiago? Why was he on the first plane out the next morning if there was no danger? You said yourself there was no danger. He can't handle the truth. That's the deal. He can't handle the truth. The truth is coming out that we have a situation here that is beginning to rear its ugly head. Now, having told you all I've told you, everything I've gone over, we're now 7 minutes away from the opening, by the way. Is it possible that there are a whole bunch of stocks out there that could be in big trouble because of liquidations coming up, margin calls? Yes, there could be. Which ones? The highest flyers, most likely. Stocks that go up the most inexplicably and keep rising and rising and rising and rising. These entities are trading way over their book value, way over their PE multiple, way over their corporate potential. Could you say GameStop is one of them? In a way, you could. But on the other hand, you could also say, yeah, but there's a difference between GameStop and maybe Tesla or another high flyer, and that's because GameStop only has 70 million shares outstanding, where Tesla has like 1 billion or 2 billion shares outstanding, where Apple has got 5 billion outstanding, whatever the numbers are. I mean, there's staggering numbers of shares out there. There's a lot of stocks that have done really well in the last 2 years who've just been ahead of their earnings. They're trading at 35 earnings, 40 times earnings, or 30 times earnings when they should be trading at 15, 18, 19 times earnings. They're almost double their PE multiples because we have a very liquid and very overinflated and hot, bubbly, frothy market. You've heard that term before, frothy. And we have bankers who've been more than eager to lend money to whomever can come in the door and say, I have assets, I need to borrow money. The bank's going, yes, we'll lend you money at 2.5%. Not a problem. We can borrow money from the government of the United States for 1/4 of a point, half a point, That's the bank rate. That's a treasury note. We can get money for a quarter point. We'll lend it to you at 2.25. We're making 2% on money. And it's just it's easy. It's just easy. And the market just keeps going. It's just great. Everything's working out. It's all working out, except when it doesn't work out. And when it doesn't work out, it changes quickly and it changes overnight. And the question is, was Friday overnight? Was that it already? Have we just witnessed the first we just noticed this iceberg sticking out over the water, and then we turned the lights on underneath the water level just to see what's down there, and we thought, oh my God, look at the size of this iceberg down here. It's fraught with danger. We're gonna find out. Banks are in trouble this morning. Some banks are under pressure stock-wise because of their exposure to this one client. They can't be the only one. Could it? And what about all the shareholders of these other public companies that had their stock go down? If you have stock in Discovery or Viacom or whatever these other issues were, and you bought stock on margin, and many others did you get a margin call? Is it now coming to you this morning? Did you get a margin call this morning from your banker? Because over the weekend they figured out, oh my gosh, all of our shareholders, all the brokerage firms that own Viacom in their books, we're calling the broker to say we need $5 billion from you Monday afternoon. And they're contacting their clients this morning going, we need 100 million from you. I need 50 million from you. I need 80 million from you. And we don't care what you sell, but it's because of your Viacom, or it's because of your Discovery, or it's because of this stock. One of these shares that got affected. We need you to cover against this position right away, because we've got to cover it right away. And so the domino effect is happening there. One of the effects could be the brokerage house wants to deleverage and just reduce their exposure to their bankers. And one of the way to do it is have the GameStop stock be bought back, get shorters to buy back GameStop shares. Lower the position of the short position in this house. You have 2 hours to do so. The market starts in 4 minutes. Is that going to happen here? I don't know. Could it happen? Yes, it could. To what extent? Unlimited. Why? Because stocks can go unlimitedly higher. But will it? That's what we're going to find out. And is it today, or is it this afternoon, or is it tomorrow morning, or is it Wednesday morning? What about Wednesday afternoon in the last hour of the day when it's the end of the first quarter? Which institutions have to pare down their exposure dramatically between now and the end of the first quarter, starting with the bankers who lend money to the brokers, then the brokers who lend money to their clients, the clients who are leveraging themselves into the stock scenario, who have their own loans with bankers all over the place. And so it's, like I said before, it's leverage on leverage on leverage on leverage. And in effect, you could literally have some hedge funds out there that only have $1 billion of actual cash, borrowing $10 billion to play the market. And they're running $11 billion in the book. And they're being told, we need you to offload $5 billion of your position this week by Wednesday close. Oops, where does that come from? It's not just from selling stock. It's also from buying stock. Anything you're short, you're going to have to buy back. You want to buy back GameStop in a hurry? Good luck, because I don't think you're going to get it at 180, 150 all you want. I don't think so. So stick around. Let's enjoy the show. Welcome to the broadcast here today. It's just another Monday. Ho hum. Just another day. Oh, nothing would go down. Let's see what happens. We've got the Dow down 174 coming into the opening in 2 minutes. S&P down 22. NASDAQ down 49. Oil off 16 cents because apparently that container ship might have been moved. They might have that thing out of there in a very few days here. So there's potential there. Just looking over at my TV, you see Kramer on TV there. So oil is a lower because the ship might be out of that canal, and then 400 ships can get moving again. And oil will ease off because right now it's at $60.81. Maybe a couple of bucks will come in, maybe not. Maybe it'll go down to 58 or whatever. The worry was that the ship wasn't going to be moved at all, and that they would have to send crane helicopters, which are, by the way, a crane helicopter can lift a container, fly it to the shore, put it on the back of a truck, or fly it to the shore where they will excavate a parking lot and just drop it there, like on the dirt surface, drop it there. They can bring cranes in there then to pick those up and put them on trucks. So the helicopters never stop. They go from the ship with a container to the drop-off spot, drop a container, go back to the ship, get another one, and they might have 3 helicopter cranes going at the same time. The problem is helicopter cranes are 10 to 30 to 100 million a piece. They're very expensive and they're very specialized, and they're usually on lease for other projects years in advance. And so to get 1 or 2 or 3 today, you're dealing with a military scenario. You might need military helicopters, and I don't know if the Egyptian Air Force has military crane helicopters. The United States has them. Russia has them. China would have them, but I don't know about most of the other countries, how many they would have, if any, and whether they're even interested in coughing some of these up, because every time those blades turn around, they have a limited cycle of maintenance. These things are incredibly expensive to maintain and keep running, and they're for defensive purposes, not to help commercial shippers. Anyway, so that looks like it's been alleviated, and the ship looks like it's going to be freed up. We're watching for the opening here. I think we're about to get it. Yeah, I see the time right now. It's time to open trading on the day. What will the market give us first thing this morning? Could be a lot of fun. 183.84 last I saw on the GameStop pre-market, I think. I'm just going to go into the market here. 183.97 on the opening. We're up 297 on the opening right now. And, you know, most of you are used to this whole charade where GameStop has a good opening 10 minutes and then the shenanigans begin. What's going to happen this time around? We have to wait, right? The stock will jump $4 or $5 in the first 2 minutes without any rhyme or reason. Right now, I'm showing it at 180.89, down 11 cents. So it's just all over the map. AMC is up, is down 2 cents at 10.22. Vector Acquisition is up 60 cents to 12.28. NAV Site Holdings, it's another SPAC I like, up 15 cents today. IPOE down 20 cents today to 16.90. Gore's Holdings up 42 cents to 14.49. VG Acquisition, VGAC, up 3 cents to 10.33. Starboard Value up down a nickel to 9.95. Fortress down a penny at 9.97. Vantech Vectors Semiconductor Fund down 2.80 a unit. Home Depot down 20 cents. IBM down 28 cents. Dow is down 92 points. Microsoft down $1.20. Apple up 37 cents. Tesla down 6.44. So we have a very relatively calm opening here, waiting to see what happens, what is going to happen with regards to any other sellouts. Are there any rumors out there? Are there any factual liquidations being done as this morning progresses? And if the street suspects that there will be problem, we'll see what happens. And Nomura Holdings is down 91 cents, down 13%. That's the bank in Japan. And Credit Suisse down 13.3%, down $1.72. They're under pressure because they're the two banks that have fessed up. We're out billions of dollars here. 177.93, 178 on GameStop, down about $3 at this moment in time. I'm wondering if the street is taking one of these approaches that stocks are under pressure because of sellouts. That's going to happen. What they're thinking is they're going to lump everyone into the same camp and just just sell out right now and get on the sidelines and see how bad this could be, which of course would compound their own problem. But with GameStop, could it be that the GameStop shares drop a little bit and the shorters are going to encourage this because they want the stock to drop and look awful, and maybe this is the kind of news that they hope will work for them, and try to get this market to drop further. But then as the day wears on, they get the call from their broker saying, you got to cover a quarter of your position or half of it or all of it. And we want you done by the end of the business today or tomorrow. We don't even want to wait till Wednesday's final trade for the end of the first quarter. We want you done now. I don't know. It's 180 at the moment, down 78 cents. So, could have a down reaction, then a serious up reaction because again, there's a shortage of paper to buy. We'll see how this all plays out. AMC, this could be good for AMC. It could be that a lot of institutions have made a bet against AMC because their thinking is the virus is not defeated. There are variants coming out that are pestering health officials. These are a problem, and that there might be theater closures later this month into April and May, which will delay the beginning of the summer blockbuster season or ruin it. And could that mean that again, these shorters are thinking AMC will be under pressure and we'll short at 11 and 12 and just buy it back at 5 and 6 and 7. Could they be over leveraged and heavily into the short position? And now out of left field, through no fault of their own, they're being told by their brokers and their brokers' bankers, we want you to offload a quarter of your leverage position. We don't care which stocks you buy or sell to get out of it, but we want you out of it because we're not going to carry you to the full amount that we have been carrying you. And sometimes well-run hedge funds and well-run trading accounts get a margin call, and where they've done nothing wrong and they're not over-leveraged, but the lender now is uncomfortable with the market. And all of a sudden, these entities have to make moves. And so the first move they make is the easiest move they can make. They'll cash in on profits. They'll try to cash out where they're ahead. So if they've shorted AMC at 14, 13.50, 13, and it's trading at 10.26, they'll buy it back here to lock in a $2 or $3 gain on a short sale to deleverage from that. And if that doesn't satisfy their lender, then maybe, okay, we're short GameStop, we'll buy back GameStop too, try to buy it up without causing a stir on the market. Well, one account may not be a problem. 50 accounts having the same issue, that could be a problem, because now you've got competition for either side of this market. Whether they got to sell stock or buy stock, you're among many others that are in the same situation. And as these markets begin to move, in other words, if AMC and GameStop go up in value, that's a problem for everybody, because whoever's short is now carrying a bigger problem. Whereas stocks that people are long on, they see them starting to come down because they're being sold off. That's a problem, because your long positions are now worth less money. You have a margin call there. Now it's a contagion. Now you have other well-run hedge funds getting calls from their brokers going, hey, listen, it wasn't a problem yesterday, but it's a problem today. Yesterday, you owed us $500 million, and we can cover any account up to $600 million. It's all great. Unfortunately, today, we've been told we can only handle $300 million in exposure per client, and you're at 500. We need $200 million from you by the end of the day. Either write me a check or sell something or buy something, deleverage by $200 million. Now, that might be 1/10 of 1% of the account. That might be 1/2%. It might be 2% of the account. It might be 8% of the account. It all varies on who the client is. But that puts pressure either on stocks that go up or stocks that might go down, depending on how leveraged you are and which direction they're leveraged in. GameStop right now, 181.96, up 96 cents. See how it shifts? It just this first few minutes. Don't even try to predict it. 181.96 volume on GameStop to start the morning, 792,000. Not a lot here. Not a lot yet on the pressure side, but we'll watch what's going on. ORCC has dividends tomorrow. Laugh out loud. Pack in, pack out. Okay, I don't quite know what that means, but okay. Yes, folks, welcome to the show. I'm glad you could make it from around the world to join me today. I've had a wonderful weekend this weekend. I talked to a number of my viewers who had set up private meetings with me, and we had a very, very enjoyable visits on each one. And again, I want to thank all of you who have been reaching out to me in the last month or so for private one-on-one consultations. I've enjoyed each and every one of them. They were just fascinating to me. There's never the same person twice. I never meet the same person twice in a row. 185 on GameStop, by the way. It's up 440. And so I've really enjoyed sharing thoughts with all of you and helping to hopefully help you figure out where you're at in your life and where you're headed and all this. 186 to 187 on GameStop, going higher. All of you, any of you who would like to have a one-on-one private session with yours truly, Saturdays and Sundays is when I do this. And I charge $400 US for an hour, and it's a private one-on-one where I sit over here on my half of the screen. You're over here on this half of the screen, and it's like a Zoom call. We're just talking here on this platform, but in a private setting, and we can go over whatever you want to talk about. Some folks want to talk to me about stocks. Others want to talk to me about options. Some just want to talk about the world in which they're in. Some just want to ask me what I think. Some just want to share their perspective. Whatever it is, I got an hour for you. And if you'd like to join me, send me a private email on my Hotmail account. It's right here. send me a private email. Say, Bruce, I would like to talk to you I'd like to have a one-on-one session with you. They've used that as a title, one-on-one session. That tips me off to read that email because I get so many junk emails and I get so many other speculative emails from people who I don't know and who are just purely, they're out of Nigeria somewhere looking for a loan or whatever. But if you're sending me an email, just highlight it as a one-on-one get together, and then just let me know. Hey, I'd like to talk to you one-on-one. When can you squeeze me in? I'll send you a proposal for a date. We'll see if we can work it out, and we'll go from there. So thank you everybody for those of you who've been already taking me up on that offer, and we're like I say, they're turning out to be very enjoyable, a lot of fun, and most interesting because I learn as much as you learn from me. What you learn from me and I learn back from you helps both of us. It's fantastic. So thank you, all of you. 183, 184 on GameStop. Interesting how it's moving this morning. Volume now 1 million shares. Not a lot. That's a good sign. The low trade apparently was 173 today. I don't know if that's true. That could have been a print. Maybe not. Maybe that'll be adjusted as we go. The high has been 197, and I don't think that's true either. But we are right now at 185.81 from what I can see, or 186 now, and 188. Excuse me. No one's complaining with a move up, I don't think, unless you're a short seller. There you go. That's what's happening on GameStop this morning. As I said earlier, there are so many things happening here with this company. I did a video last night. You may have noticed I did a video Friday night. You may have noticed talking about what's happening behind the scenes with GameStop and on the share side, and what could cause the stock to go to 1,000 a share. And I'm just using that price as an initial target. I'm not saying it'll never go over that, or that's as high as it could ever get to. Some people say to me, "Oh, you're limiting the upside." I'm just going, hey, it's 180 something now. I'm asking what could make it go to 1,000. Then I can do a video if it goes there and say what could make it go to 5,000. And people will get upset with me. Why did you say 10,000? Okay, I can never make everybody happy. I'll do the best I can. But what could make it go to 1,000 is what I wanted to talk about. And there's a whole bunch of stuff going on that could actually make this happen. Today's developments in the hedge fund world are actually a piece of good news that could actually drive this. Now, while I'm yapping away at you, the Dow has turned the corner and gone up. It's up 11 points, turned around. S&P is only down 4, and NASDAQ's only down 9.5. So the hope in Wall Street here, and I'm watching Jim Cramer talk over there, the hope on Wall Street is that this sellout that took place for this hedge fund on Friday was a one-off. That's what everyone is hoping it is. And I'm sure that bankers are assuring their backers that we're not exposed to any problems. We weren't involved in it. Our other clients are fine. We've done a review of all of our lending practices, and we're all good. Maybe that has assured the market so far to have a Dow go up 18 points. That could be it. But then again, maybe there are problems that haven't been discussed, that haven't been discovered yet. There's always that. One never knows. Anyway, we'll follow it as best I can for you and see what's going on. By the way, thank you all of you coming in here. A few donations coming in too. Thank you, S. Miller. On the 30th of March, New York GameStop will be having another interview with Third Bridge, named GameStop E-commerce Transformation and Structural Business Overview. Well, I say that's a good thing, don't you? I think that would be fine. The more exposure, the better. Please, Josh, I'm sad I had to sell some of my shares at GameStop to pay for my dog's surgery. Sorry I had to do that. Hopefully the dog will be okay. And we move on. It's the way life is. Anyway, 188, 189 now. It looks like we're coming higher. Dog is most important, someone's saying, and a good choice. Martin, I'm still banned from Reddit's and was removed from Warden's video chat for asking about it. I'm a holder. I only lived once 60 days ago. Martin Seeger. Right on. Welcome to the show. Sean, thank you for this out and out sticker, $25 donation. Thank you very much, Sean. That's very kind of you, and appreciate those. 186.41 on GameStop, 10.56 on AMC, up 34 cents for AMC, up $5 for GameStop. Volume on GameStop now, 1.4 million. Light. 14 minutes in, not a lot happening. It's 100,000 a minute. I mean, I'm saying 100,000 shares. I mean, it's light. All right. Still, we'll see. New member, Crappy Kirby. Welcome, Crappy Kirby, to the channel, and thank you for joining us and becoming a member. You're among good people here, and I appreciate you joining us, and hope you enjoy your emojis that you'll be able to use. We've got the knee emojis and others. We popped a couple up yesterday. I've got a new I want to rock emoji, and we have a new volcano emoji. Check them out at your leisure. Have fun with those, and thank you guys for being here. Fantastic. Yes, 187 and 1047 on AMC. Dow up only 4, S&P down 8, well 7.7, and Nasdaq down 33 points. Okay, we're watching what's going to happen, if anything's going to happen here. This opening of Jaden. Thank you, Jaden Ireland, for becoming a member. Just saw that pop in here. I appreciate all of you guys who are becoming members. Those of you who are members, you know. Those of you who haven't, you might might not know. From time to time, I will pop a private message to members only of a stock that has caught my eye that you need to be aware of. And you never know when these come your way, because things change all the time. And so I'm always on the lookout for the next possible opportunity. So if I see a stock that I want to add to my favorites list, you'll get the heads up because you're a member of this channel. Members usually get about a 48-hour heads up before the channel as a whole does. One of the privileges being a member of this channel to support me, I want to support you back. And if any of you are able to take advantage of any of these stocks one day, and heck, you buy 100 shares for $13 and sell them for $15, and you made a $200 profit on the flip, hey, that's more than the entire year of being a member of this channel. So I'm a happy guy that it wouldn't take much to justify the cost of being here. But in the meantime, while you are a member, you're allowed to make comments on this chat area, where we have, I think, been able to eliminate a huge amount of the abuse that we were getting 2 weeks ago, and I'm really happy about that. So thank you, all of you, for all of your support in any way you're doing, and I love you guys. My boy Hibik, with no internet on market open, diamond hands, boys. Okay, Adder, thank you for that donation. Sean, oh man, thank you, Sean. $50 donation. Uncle B, financial feminism. Humaningen and HGENHN, who may have had the only no side effect cure for the cytokine storm. Pre-Ved 2000 just announced the best P3 COVID data ever. Should I buy? No idea. That one is your call. I don't know anything about these guys. I cannot give you an opinion because I'd be lying. I'd be just guessing and making stuff up, and I don't want to do that. But Sean, thank you for your support of my channel and being here. This donation, and thank you for the head up on this one. You know, if you're making money on it, make a ton of money. Please make a bunch. Fantastic, guys. Thank you so much. 185.30, up 30 cents on GameStop right now, where AMC's up 29 cents to 10.53. So there you have it. Thank you, everybody, for popping by and seeing me and hanging out with yours truly. I appreciate it. Interesting morning, as it always is. The Dow now down 10 points. Had a little pop. I think it was up about 15 at the high. Now down 10. S&P down 8. NASDAQ down 32. Oil down 57 cents a barrel to 60.40. That's where I see it so far. And we're waiting now for final confirmation about the ship in the Suez. Will they be able to get it out of there and move forward with the traffic of the Suez Canal? Can they open things up again? We'll see what's going on. This video I did yesterday, I guess I dropped it yesterday afternoon, I think. Here's a good question. When are they going to run the bullets? Your guess is as good as mine. It might be the bankers that shut them down. It won't even be the fact that they can just keep selling stock. It's when the brokerage community says, we don't care how much money you have. We're not comfortable being short this many shares or not being able to deliver these millions of shares. We want you to cover, because we can't cover you anymore on the lending. And that means that they have to buy the stock at whatever price they can, even though they have the money to carry all they want to carry. It doesn't matter. But part of this video I did yesterday, I was talking about the rectorship thing. I was talking about how the company is becoming Cohenized, Ryan Cohenized. This is a trend that is, I think, going to be a bigger and bigger dominant trend. Sell with dips. Hi, Bruce. Thoughts on Viacom going from 100 to 40 on news of diluting shares. 3 billion room to go down more. This could be big long term. I tell you, this is the fear that brokerage firms have, and so do investors. That if you get an over-leveraged fund, excuse me one second, I just got to make a change here. You get an over-leveraged fund out there that is forced to, when you're only 4'8" tall, these cushions can get intimidating, right? You believe me, right? You know I'm 4'8", right? But when you get over-leveraged funds like these, who have to sell, and I mean now, bunches of stock, blocks and blocks, that can really ruin a company's chart. Theoretically, maybe on the other side, there's a trade, but on the other hand, this could be the beginning of a cascade of problems. And it could be a beginning of a series of margin calls on the same stock through all kinds of other players. Because remember, a brokerage firm might say to a client, whether you're a retail client or to a hedge fund client, they may say, look, we know you have an account worth $100,000 and you only owe us $10,000 against the account. But the stock that you have got the most of in value was, maybe your account was worth 150 yesterday, it's worth 100 now. Maybe this Viacom CBS is the biggest holding you have. We're not comfortable carrying any margin on it right now. And even though you've got other assets, we've noticed your account go down 50,000 in value. We're going to need you to offload 10 grand worth of anything to take care of this thing. And if you're a one-trick pony and all you have is Viacom, and you've borrowed money on Viacom, the broker may call you up and say, we can't lend you a dime on it. All the margin you have on Viacom, we either need you to bring in cash to cover, so you just own it for cash, or we need you to sell enough stock to cover. And if you borrowed money when it was 150 or 100, you borrowed money when it was 100, and it's now at 40 or 50, you might be wiped out. You might get sold out of everything and you have nothing left. You have nothing owing, but you got no money either, or it could be that you got 10 grand left of the 80 grand you had 3 days ago. I don't know. No fault of your own. You did nothing wrong. You don't have a problem with a hedge fund. You're not a hedge fund. You weren't the issue. The other guy was. Well, over-leveraged is over-leveraged. And this is why I mentioned about GameStop all the time. You guys own stock in GameStop. And through no genius of yourselves, this stock could go to $300 a share at any time. Why? Because people are over-leveraged on the downside of GameStop, and they could be forced in. And your friends will say, you're a genius. You bought it at 150 and it went to $300. Wow, are you ever a smart guy? And you'll say, yes, I am. I am a genius, and I don't ever forget it. That's right. But the reality is, the reason it did what it did was through nothing corporate, but through structural. Amazing, right? Absolutely amazing. Where am I here? I got a quick catch-up. Gun, a negative beta, negative 23 GameStop. Is this good or bad? Anybody know? Christopher Abilo, want to get the ship moved? Tell Wall Street Bets it has 140% interest. Bruce, you're 6'10". You keep lying to us. Stop lying. Don't lie to us. You're not 4'8". You're huge. Ventures with Duncan. There's a buy order of 5,000 GameStop at 182.63 on GameStop. Kevin O'Connor, you're 6'9", man. You're 6'9". Come on. Wally's World, sell with the dips. Tiger Cub is a cause. Goldman and Morgan Stanley sent letters out to clients telling them what was up. Good one, Christopher. 6'9". Here we go. Who's your daddy? Half of us say Elon, the others say Ryan. Why not both? There you go. And thank you to Esau, Zechariah Real Estate for becoming a member of the channel. Thank you for joining us today. I'm glad to welcome you aboard as well. Michael, same to you, buddy. Michael Garcia, welcome to the channel. Another member. I love you guys. Thanks for joining in. As I said earlier, members will get heads ups from time to time when I add a new stock to my favorites list. I will send a private message to members only through the YouTube alert system. And that's why I ask you, please subscribe to this channel, hit the bell notification icon to make sure you get these alerts, so that when I do an alert through the member system, because you become a member of the channel, only messages only go to the member holders only, and it'll come to you as like an alert email through YouTube or something like that. And you'll go, oh, Bruce is at it again. He's got something going on, and then you've got a bit of a head start on the rest of the street. So again, thank you for doing that. Back to the video. I talked about directors changes. I talked about the Ryan Cohenification of the company, and this is the other thing, because we've noticed in press releases that the company has made, not many, but a couple, talking about we hired the COO from Amazon. We hired her from there. We brought in technical people about a month ago from Amazon and from Chewy and from other places. Get used to this. Get used to this as a normal, ongoing thing going forward, that this company will continue to send headhunters to go get talent into this company. And the more talent they attract, the more talent they will attract. And you start bringing in the right kind of people for e-commerce into this company's management ranks, you start to attract directors that want to become a director of this company. Because remember, directors earn share options as part of their advisory services. They get a stipend to be a board of director, of course, but they also earn shares in the company that they're being a director of. And when you're a director of a public company, you're hanging out with 15 other people who are directors of a whole bunch of other firms, and you've just increased the size of your Rolodex dramatically. So directors love being directors of multiple public companies, because they end up with 100 good pals over the years, or 200 pals of all these other companies that they're fellow directors of. And it might be that you know this person because both of you are directors of that company, but you also met another person who's a friend of the director of that company, and you met them on a golf course one day, had a round of golf with them, and you're building your relationships, and you're bringing to GameStop, bring it back to GameStop, you're bringing GameStop the outside world connections right into the boardroom, so that if the president of the company, the chairman of the board or whatever, that's talking about, well, we're thinking of getting into this area of commerce, they want to get into this kind of business area, one of the directors goes, I know a guy, or oh, I know a director on that company. And so if a possible merger or takeover is to be discussed, sometimes it happens where a director will take the lead on that deal and will say to the chairman or the CEO or whoever, I have a friend of mine, a good buddy of mine that I've known for years, who's a director on that board over there. And I'll give him a call, shoot the breeze with this guy tonight, let you know what's going on. And the next day calls up the president of the company, says, I had a chat for an hour last night with my old friend who I've known for 25 years. And those guys actually are looking to be bought out. They're actually interested in merging with somebody else. And your name has come up from time to time. A call from you would be a welcome thing. Or I've asked my director buddy if they wouldn't mind getting a call from our chairman of the board or CEO or whoever's in charge of this project. And they said, we'd love to talk to him. And so all of a sudden there's an open communication window right there. And it could well be that the director goes one step further and says, I'll tell you right now what it'll take. Their stock is trading at $20 a share. Your stock's at $200 a share. If you can offer them a deal where they get 12 shares of your company for every share they got, or what the ratio is, instead of a $200 takeover, a $20 takeover, make it a $25 takeover, with stock. You got their interest, or it might take $30 a share to do it, or whatever the reality of it is. A lot of time and effort and problems can be pre-solved with these kinds of board connections you have all over the place. That's why you want a Wall Street banker on your board of directors. You want a Wall Street lawyer seriously connected SEC lawyer from Wall Street on your board of directors. 193 on GameStop. We're moving up right now. 193 on GameStop. It's up $12. Anyway, those kinds of directors coming into GameStop, just one Wall Street banker, one Wall Street lawyer, maybe a serious hedge fund player, like a serious board member of a hedge fund that manages $50 billion, $80 billion. One of those guys on your board of directors. Again, all friends of Mr. Cohen. Here we go. I mean, this is how companies are perceived by investors on the outside who go, oh my gosh, look at the contacts these guys have. In-house contacts these guys have. Yeah, this is some serious stuff. These guys aren't going back to $50 a share. They're not going back to $100 a share. This is beyond. And so you announce any one board member that that the street perceives has a serious connection to a Goldman Sachs, JP Morgan, Bank of America, Tesla, you name it. I mean, Microsoft, whatever. The street will go, I'm buying this stock. I don't care what the deal is. I'm buying this stock because these guys they're bringing in some heavy hitters here, and there are serious connections. This isn't a little tiny shopping mall retailer anymore. No, I believe this guy. I now I get it. Yeah, they're shutting down the stores, going e-commerce, and then they're going to open up different divisions, and they'll do that by acquisition and by merger and by buyout. And oh my gosh, yeah, the money won't be a problem. The money is not the problem, because the personnel coming into the board can find the deals and find the capital. And oh yeah, okay, here we go. And that's what we're after. That's what I'm looking for. I'm wondering if the Ryan Cohenification of GameStop means that GameStop has its own Elon Musk, a visionary, a futurist, someone who's sitting there going, I have created Chewy from nothing with a bunch of other kids. We turned it from 0 to 3.5 billion as a private company. We sold out. And then PetSmart took it over, reorganized it, and listed it as its own company. And it's now sitting at 30 to 40 billion market cap. Way to go. Now I'm into this company. I have 9 million shares, Mr. Cohen will say. I own 13% of the company. And I've got plans for this company. I see the future. All of the people I'm bringing in as board members are gamers. They're in their 40s, their 30s. They've got connections to all these various areas of finance and the markets and the business, and they're all buying into the conification of what this thing's going to be about. They all want to be part of it. And the next thing you know, every board member is getting phone calls and texts from their friends that are everywhere going, oh, congratulations on becoming a member of the board of GameStop. I just read the press release that you've been nominated to the board. Why did you join these guys? What was it about them that made you want to do it? And they'll have limited things they can say and limited things they can't say. But I can tell you that the strong inference will be, I got this offer and I jumped on it because man, oh man, are there plans here. I mean, this entity, you're not going to recognize this company in the next 2 years. Not going to recognize it. And that's what could be happening with the future of the shares of GameStop. This kind of involvement with these kinds of caliber people just takes it to another level, which again means the shorters are in huge trouble, because people who own stock in GameStop, legitimately own it, are going, I'm not selling this stuff at 185 a share, 189 or 190, whatever. I'm not selling this stuff, because I know that these people they're bringing in are not here to get the stock to $250 a share and then it's all over. No, these folks are here for the much more leveraged way out. They're looking at the next 5 to 10 years to take this company to a level that no one could have imagined 2 years ago. Certainly not any of the analysts on Wall Street the last 2 years, who, to be fair to those guys, they were writing up about a company that was failing and not doing a lot and had a tired looking kind of a look to it. Well, that's all over now. That doesn't exist. That GameStop doesn't exist anymore, and will certainly not be part of the future of this company, because complete change out is happening at the board level and at the management level, and structural level and the company business level. It's all different. It's all 2021 to 2025 to 2030. It's all looking forward. So there's no looking back at the blockbuster comparisons anymore. It's all this forward looking where this company's gotten to. And that's a refreshing change for what was a tired looking $5 stock last summer when I did a video back in June of last year talking about the over shorted stock called GameStop. Back in June last year, the stock was $4.88 a share, and things don't look the same anymore from a stock perspective, corporate perspective, and personnel perspective, all different. And so you folks have to decide for yourselves what your involvement's going to be going forward. But I have a feeling I kind of know what the street's going to be doing. I think the street's going to really like this, and they're not going to be able to get enough of this stuff. That's my hunch, because they can't get enough of this stuff. There's a certain part of the street was going to need a lot of this stock, and for short reasons, I'm not going to be able to get it down here. They won't. Anyway, yes, interesting. Modest Monday losses for the U.S. stocks amid concern about major funds margin call. That's a headline in Market Watch. Market contagion concern in wake of Tiger Cub meltdown. These are the headlines that are showing up here, and I'm wondering if this truly is going to come through, going to happen here in the next few days. Is GameStop going to go to 300 a share because of it? Because its leverage is on the short side, not the long side. The longs are not. You see, at 187 a share right now, even 190 or 195, whatever it hit this morning. What did it get to? 190, 193. Yes, it's true that from last summer at 488 a share, when it went to 500 a share, people made a lot of money. But I can tell you that practically everyone that had the stock back at 488 a share last July, and I'm not talking about insiders, but even some insiders are long gone, they've sold. But regular shareholders and other fund, they flipped the paper over. It's turned over. It's turned over. I would bet you right now that the average price paid for GameStop shares, other than the insiders, other than the management, the outside free traders, I would bet you right now the average price paid is in this 120 to 150 neighborhood. And there are people who have $250 averages, $300 averages. Some have 80, some have 40s. You're all over the place. The short sellers, I think, are all upside down. They're actually losing money, probably across the board. But some of them are down 20 bucks a share. Some are down 50 bucks a share. Some are down 80 bucks a share. Some might be down as much as $100 a share. So this 189 neighborhood is no longer rarefied air anymore for GameStop. It actually isn't. Rarefied air for GameStop now is $400 a share. That would be rarefied air for everybody. And at 500 and 600, add to it. So the shares have been 483, I think, once this year for the high trade. I'm calling for a higher trade than that this time around. But what day and what minute, I can't tell you. But here at 188 a share, we're used to the fact that it can go up 20 bucks and down 30 bucks, $50 spread in one day. We know that can happen with this stock. We've seen it happen again and again and again. But we don't believe, most of the market does not believe it's going back to 40, 50 bucks a share, because there are all kinds of people who regretted not getting in the last time. And they're waiting for their chance to pick this up. Every time it dips, there's a buy wave. And the other thing about the video I mentioned the other day, and the other thing that you need to watch out for, is not only the Ryan Cohnification of this stock, but the Redditification of this stock, or the Wall Street betification of this stock. Readers of Reddit and Wall Street Bets and GameStop stock sites, there's millions of you. There's millions. There's probably 10 million at least who read Reddit regularly, Wall Street Bets, fairly regularly. But I'm going to guess there's another 10 million of you that are becoming aware of it and beginning to look into it. So there's at least 20 million people out there who follow the GameStop story in one form or another through Reddit alone. It's possible that there are 3 or 4 million of you that hold the stock right now. It's possible. And some of you hold a half a share. Some hold a share. Some hold 5. Some of you hold 10, hundreds, thousands. But you're retail investors. My hunch is in the next few weeks, And even in the next few days, it might be so soon. Once we start hearing about the directors coming in now, it could well be that the Reddit crowd, maybe 5 million of you who are thinking about this thing and watching it right now, 5 million of you might come in here for an average of 10 shares each. Just your small investors. Some of you will buy 1 share, 4 shares, 3 shares, 5 shares, 15, 30, 40. 10 shares for 5 million people could be the buy wave on this stock. That's 50 million shares of buying, cash buying of this stock. And when I say that, I am putting fear into the hearts of anyone who is short this stock, because if legitimately 50 million shares of buy interest comes in from a new wave of investors who just like the Ryan Cohenification of this company, there is no way that they can get 50 million shares under at least moving it to 300 to 350 a share. There's just no way. There's no way. We've traded this morning 3.2 million shares. They've been as high as 193 today. They were up $12 a share. We haven't done 3.3 million. So you think about 50 million shares of interest coming in here, even if it's only 5 million shares a day of buying, this absolute nonstop effect just compounds itself, and the stock can gain 30, 40 bucks a day every day, just 10 straight days. And the next thing you know, you get a $400 stock. The shorts are then carrying positions that I'm going to guess if they're down right now, let's say 80 bucks a share. They're in, they say about $100 average. If they're down 80 bucks a share and they're short 150 million, in one form or another, whether it's again naked writing of contracts, it's non-deliverable of securities, it's shorting of ETFs, or whatever these tricks are. If we're talking 150 million shares and it's $80 a share, that's a $12 billion problem right now. Here, if the stock doubles, it's a $24 billion problem. The stock triples, it's a $36 billion problem. I'm telling you that if 50 million shares of buying comes in, cash buying, in small little amounts, that's all it is. It doesn't. We don't need any one guy to buy 25,000 shares. We're talking 1, 2, 5 shares at a time. This would cause a massive $30+ billion headache for shorters, and their brokers are going to say, we're not carrying anymore. I don't care that you can handle the trade. I'm just not comfortable holding this position with this house. Every other house will do the same thing, forcing them to drop their short positions by half or more. That takes the stock to 800 a share. It's just numbers. Nothing personal. It's just business. Okay. It's Godfather 1, old school Godfather number 1 from 1972. It's not personal. It's just business. And with only 70 actual million shares in actual existence, and you get a demand of 50 million shares from Redditors, who I think are going to come in here, and then you got another 50 million shares of interest from shorters who got it. That's 100 million shares of buying that needs to be. I don't see it coming in at these prices. I just don't. 1A99. Thank you for becoming a member. Nice to have you here. Yeah, I just don't see this. I just don't see the stock down here to satisfy. Now, I know there'll be purists out there who will go, this stock isn't worth $400 a share, Bruce. If it trades at $500-600 a share, that's an artificial price. And I'll say, yeah, you could say that, but would you rather it not do that? Who wouldn't want that to happen except the shorter? But I remind you that even now, as I'm sitting here talking to you about this story, the Tesla shares are $603 a share right now. They're down 15 bucks. The stock at this moment, Tesla, is trading at 942 times earnings. That's its PE multiple. Is that overvalued right now? From a PE multiple? Yeah. Yeah, you're darn right it is. It's way overvalued. Where should this stock be trading at right now? 30 times earnings? Should it be? That would put it at 20 bucks a share. That's where Tesla should be right now on 30 times earnings. It's $20 a share, but it's trading at 604. Is that an exaggeration of its price? You could say it is. But others will say, yeah, but Bruce, the company is on a growth curve, and they're the leader of the electric car market, and that's where everybody wants to go. And after all, Elon Musk is running it. So it's been Musked. The company has been Elon Musked. The stock has. I'm just saying about GameStop. Same thing. The difference for GameStop, though, is they don't need to raise $5 billion in a hurry to build a factory in Shanghai or a factory in Berlin like Tesla built. They don't need to build a battery factory in Nevada. The GameStop doesn't need that kind of money for that kind of thing. GameStop, if they raised $1 billion or $2 billion in the next little while, they could maybe acquire some competition of theirs. Maybe they could acquire a game manufacturer. They could acquire a accessory manufacturing company. I mean, they could. Do they want to? I don't know. They could perhaps build a new warehouse to handle online order flow through India, through Indonesia, through Thailand, through all of Asia. They might build a distribution plant in China that will allow them to distribute all through Asia for their future clients, because there are gamers in Asia like you cannot believe. This company has not even scratched the surface of going after the actual market. But do they need $5 billion or $10 or $20 billion in the next 6 months, 8 months, 2 years? No, not really. They need to only convert from where they are into an e-commerce platform. $500 million will probably do that, and they've got 600 in cash on hand, and they have the ability to probably raise another 500 to 600 billion by selling off some of their stores in just blocks of stock and blocks of shops. So they don't really need to issue stock, which keeps them at 70 million shares outstanding, with a company that is going to quickly become valued as an e-commerce player. I mean, this just takes us to a whole other level, as I've said 1,000 times before. Anyway, there you go. There's Bruce just talking. Wally's World, riddle number 2. Type in my name on Bruce's YouTube. Soon you will see the reason that Canada is important to me, but only on CBC. This great one also lives forever. Thank you, Bruce and RC. Okay. I'm not sure what that means, but if it's a good thing, I'm a happy guy. Olivia, watch The Inside Job too. It's showing some scary truth about hedge funds and their associates. Yes, indeed. Most interesting what's going on out there. Thank you all for joining me today and hanging out. GameStop 187.82, 186.03, varying right now, $5-6 gain on the day. Volume on GameStop is only 3.5 million shares. Very light trading. Kevin, thank you for becoming a member of this channel. No, I'm glad you're here. Sean, your gen is way better than Aniston. I bought HGEN because you told me to. Up 85% today so far. Bye-bye COVID-19 and cancer too. Oh, okay. I don't remember saying you should buy it, but if you're crediting me to make a bunch of money, I'm really happy for you, and I want you to make a lot of money. I'm glad you're doing it. But everyone has to decide what to do. Kevin, we love you. Thank you so much, Kevin. Welcome to the family. My comment is that GameStop should buy costs. Well, it's an overpriced company to a degree. Maybe that's a way to go, but maybe you don't want to do it with stock, not cash, right? That might be the way to go. We love you too, Kevin. We love you, Kevin. Let's see. Sean's smiling. Colin, he's up 85%. Take that credit. Laugh out loud. Bruce didn't recommend that stock. Like I say, if I gave you the inference that it was a good idea and it worked out, then I'll take full credit. Way to go. Oh my goodness. Oil resistance at $60. Commentators, it's going below 60. Oh, I think so. Yeah, I think personally, I think oil is overpriced, but that's one man's opinion. What can I tell you? I don't control the price of oil, but I can comment on it, I guess. The Dow is up 11.5 points. S&P down 17. NASDAQ down 102. Oil down 61 cents. That's what we're sitting at right now. GameStop 186, 187 seems to be the pricing range right now. We'll see how it wants to perform. I'm looking for any announcements from the company or anything else about it. Can't see anything here. Just double checking to see if there's any commentary, any articles written. Nothing that I can see. So nothing on GameStop to alert me to anything here. AMC at 1065 up 41 cents. That is near its high of the day. It was 1076 this morning. That's good to see AMC a little better. Only 13 million shares traded, though. Very, very light trading.
Vector Acquisitions, VACQ, up 32 cents to 12 bucks. Nav Site Holdings up 15 cents to 10.20. Social Capital, IPOE, down 56 cents. Gores Holdings down 23. Virgin Galactic is down a dime. Starboard down 4 cents. Fortress down 3 cents. Vanek Vectors down 4.30. That's the computer chip hedge fund. ETF, I should say. Home Depot down 273 to 301. IBM down a penny, not changing. Dow down 27 points. Microsoft down 388. Apple down 5 cents a share. Very quiet. Over in Bed Bath & Beyond up 39 cents. BlackBerry down 14 cents. And then over at Royal Caribbean down 81 cents to 83.84. Norwegian down 34 cents to 26.48. And Carnival down 20 cents, 25.86. That's where we're at on those guys. Watching banks, JP Morgan down 245 to 152. And Goldman Sachs down 221 to 325. No big whoops here. Nothing to worry about with these guys. Let's see. Anybody else has problems? We're looking. I don't see much else to be worried about here at this point in time. The way the market's reacting here, the indexes, no issues this morning with margin call problems. No issues seem to be popping up here regarding any other hedge funds or other investors at the moment. Everything seems to be under control and okay for now. All right. So we'll take that calm scenario. Andrew, thank you, Andrew, for this donation. For this comment about oil. And now over here to Isaac. Isaac, thank you for becoming a member. Isaac, thanks for joining me. And also shout out to Made, member, new YouTube member. Thank you to the two of you for popping in here, joining this gang of pretty good people. I really glad you're here with us as we continue to grow this the following of this channel. Fabulous, guys. Thank you. How are we doing for thumbs ups? I haven't even looked here. We have 2,200 thumbs up so far today, 59 on the downside. Let's round that up to 60. So we're almost 30-something, 35 to 1, I guess. Is it that good? Would be great if we could get something more going. With 2,200 thumbs up, so we got 5,800 people here. If any of you 5,800 can find a thumbs up button and nail it for me, maybe we can get the thumbs up over 3,000 this morning. We just had 2 thumbs downs come in. Now a couple more of those. We're at 65 on the down and 2,400 on the way up. So keep this coming up here, guys. Keep hitting that thumbs up button for me, and let's run this to 3,000 as quick as possible. Thank you all for that. All of you using these emojis, I hope you're having fun with the emojis. We've been adding a few here and there, bit by bit. Keep your eyes open for new emojis. Of course, we love using the knee emoji all the time. We now have these new volcano emojis. Of course, we always use the thumbs ups and with the buzzers. We love that. And again, all of you who are doing these and having fun with me on these logos, I get a real kick out of it. It's a lot of fun. I thank all of you for being part of this. It's part of this channel silliness. Can't be serious all the time. I'm amazed at how many people actually criticize my channel for actually trying to have fun on it. It kills me. I don't know. I just can't be all Mr. Serious all the time. You got to lighten up. Life's too short. Anyway, thank you all of you for being here, and 2,600 thumbs ups now, 70 on the downside. If you really hate this channel, hit the thumbs button down twice. Hit that thumbs down twice, because that really tells YouTube you hate me. It's your best way to go. Thank you all of you for this support. I appreciate it. 186.87 or so on GameStop, jumping around quite a bit. 185 now. Volume on GameStop, 3.7 million. Really quiet. I mean, it is quiet today. This is a tell for me that there is just no panic to get out of the stock. I mean, people are just not worried about wanting to get out for any reason. They're not going to be sold out. They're not going to be shoved out. I'm rather interested in seeing how this happens, how this is working, how the lack of stock trading when it's up $4 to $12 in the morning, that much movement on the upside, and there's just very little volume. That's telling me
There's nibbling coming in, but there isn't a bunch of selling coming in a desperate way. If the sellers were desperate to get out, they would be hitting these bids at every opportunity, and the stock would be down in the day. The only time a stock goes down now, from what I can tell you, is when it's getting attacked by either a short seller or someone who's acting on behalf of one. And this is just my opinion. I can't prove it. I can't name sources. I can't name you names of exactly who's doing what. But the pattern, the way this stock trades in violent bursts on the way down, just violent, that is not orderly selling. That is premeditated attacking of the credibility of the bids. That's my personal take on it. But hey, if you own stock, you can do whatever you want with it. And if you've borrowed stock to short, I guess you can do whatever you want with it. Thanks, by the way, for visiting my Redbubble store and picking up this stuff. Man, you guys are great. We got Redbubble going full bore right now. They're really busy over there to try to keep up with the orders that you're putting in, which is incredible. Thank you all so much. Again, those of you who have been sending private messages, you want to have one-on-one meetings, I will respond to them later today. Just be patient with me while I get through my live shows, and I'll get back to you. Al Barea, thank you, Al Barea Khalil, for your donation. Appreciate that. Looking for a shout out for no money. I appreciate that. I can't be doing that. Thank you guys for following us. But thank you all of you who've been picking up items on PayPal and on sending donations on PayPal and picking up items on Redbubble. It's all good. Thank you so much for that. All right, 184.50 on GameStop, up three something a share. Very good. The Dow down 78 now, getting a little bit of a hit there, but it's only down 0.424%, quarter point. S&P down 19, NASDAQ down 100. Oil $60.09, right at that level. Wally's World, we're going to hit that. I don't know if you've noticed. Excuse me. There is a page dedicated to my channel, Stock Markets with Bruce, on Reddit. It's a sub page on Reddit. And this weekend, someone posted a video on that page and on Reddit as a takeoff on me. And they took a clip from the movie Monty Python and the Holy Grail with the knights that say "nee," and they put me in there, and they put some other characters in there. So if you get a chance to check it out, it's a couple of minutes long, and I just laugh every time I see this. It's such a hilarious and silly thing, and I love it. And I'm humbled by the fact that some of you would take the time to do all that work to put these subtitles in and show my face and other people's faces and just have a little story going on. I appreciate it. It's a lot of fun. I appreciate it. I have a pretty good funny moment, and I did get a laugh on all of that. Alrighty. What else is going on here? Let's see here. You're a star, Bruce. You're just gonna have to deal with it. I think not start, but a star. Yeah, thank you, Andy. I do what I can. I don't know. Thankfully, I live in a little village here in British Columbia where virtually no one watches me. There might be a handful of people who know who I am around here, and so I don't have any starstruck issues here or people coming up to me going, "Can I have a selfie?" Because I don't go out of the house very often. I'm in front of this computer all day long, talking to you guys, trying to figure out what's happening. And so this is it's a little island. Oh, excuse me, folks. Oh, it's been a long weekend. There's a little island here, and I don't have to worry about that. Thomas Kopechny, thank you, Bruce, you beauty. I have a feeling a lot of us are invested in Bitcoin. Please consider reporting on it too. I am useless when it comes to reporting on Bitcoin. I mean, I don't have any. I have no skin in the game. I don't know how it works. I don't know how it happens. I don't know how it exists. I don't know what the future is going to be for it. I'm totally the wrong generation. It is interesting, though. I do get approached a lot
through private emails all the time. I get these emails where entities are asking me to, would you be willing to, work with us or promote us or mention us or, whatever, the shout out or a commercial or whatever. And I don't even know. I don't know what it is they do. I can't figure. At the moment, I have no ability to figure this out. And so I'm just kind of doing what I can with what I know. And I'm so busy with what I'm aware of and what I know. I'm so busy with what I'm trying to follow about what I know. I really can't take on additional stuff. But there may come a time, I've mentioned in the past to you folks out there that I'm in need of a manager, I think. At least I think I am. I think I'm in need of a manager who can guide me through the sponsorship and branding world that may come my way because as this channel grows out, I guess. And keep me away from shysters, because there are zillions of those out there trying to desperately get me to click their little thing. It is so bad. Anyway, I'm wondering if one day a manager person that helps me out will say to me, okay, I've got a legitimate deal here that you should be exposing, that your viewers would love if you talked about it. They probably utilize the services of this company or would want to utilize the services of the company, and it would be a good symbiotic relationship. Maybe these are the kinds of this is the kind of sponsor that down the road, when you do a meet and greet someday, you'll go to LA and you'll go to Dallas and you'll go to Atlanta and you'll go to Miami, you'll go to New York, and you'll have a meet and greet in a hotel conference room or something like that. These folks will help co-sponsor you at these live events and help promote you there. And I mean, who knows? I don't know. It's early days for me over here in the middle of nowhere where we can't travel. I have no idea where it's going to go. So yeah, maybe someday a cryptocurrency something happens, or other relationship happens with whatever entity and this YouTuber. I'll let you know. I don't know what's going on. And we'll see what's happening. How'd you get so cute, Bruce? Oh, it's a full-blown skin regimen. It's I have handlers, makeup people, every morning. I mean, the therapy, just the therapy. Oh my gosh. It takes my breath away. It makes me cough. Just the thinking of all the therapy I have. Custom, hey Bruce, enjoy the stream. So helpful every day. Can you give a shout out to Scotland and Billy and Emma, new traders following GameStop? Sorry, I can't give a shout out to Billy and Emma in Scotland because the donation isn't large enough. I normally it's 25 American dollars for a donation, but this is only 5 British pounds. So I can't say hi to Billy and Emma, the new traders on Game, because that would be breaking my rule. So. Please forgive me, but welcome to the show. Lloyd, traffic resumes in the Suez Canal. VGAC SPAC, how much time do they have to get it done? They have forever, but they'll probably have it done in the next 30 to 40 days. Should be about it. So 5-6 weeks maybe should be about it. But don't hold me to it. But that should be about 90 days in total. They figured it was a 90-day time frame. Anyway, there you go. Ryan Cohen should be Uncle Bruce's manager. There you go. Okay. All right. Return with shrubbery. That's right. Return with shrubbery. Oh, thank you, everybody, for all of that. So much fun. We're at 178 on the stock. I agree. That's where we're at right now. 178. It's doing what it's doing. Bridget, if stock moons, does this happen quickly, minutes, hours, days, then drop back down, or does it stay high? Well, my thinking, the long-term thinking, after, I don't know, in the next 3, 6, 12 months, there will come a point in time where the company's shares will reach a certain level, and they will start raising money. By the way, stock's at 180 again. They will start raising money to pile up cash in their treasury, which then means that the stock will never go back down to 50 a share ever again, or it would never go under 100 ever again. I mean, if they raise enough cash to get, several billions of dollars in the bank for the company. It'll get to the point where the street will say the company's book value, just cash value, is $80 a share or 100 a share, whatever that might be, and then the so-called enterprise value, that quote enterprise value, that might be quoted someday at $275 a share. That's their enterprise value. They have cash and the cash flow and their business and their however millions of viewers of their website and the cash flow from this division, never less than 275, and the stock could be a 550 stock. I mean, I'm just throwing generic numbers at you. Don't quote me on these. I can't tell you this. I can't guarantee it, and I can't give you a timing. But that is the eventual game plan, I think, of the shares of this company and probably a lot of its investors, where they know that, it'll fluctuate, but it might be, the new fluctuation might be between 400 and 600 a share. That'll be the high and the low. Eventually, it might be 800 to 1,000 a share is the new high and low for the stock. Maybe someday it'll be 13 to 1,600 is the high and the low of the stock. Every stock eventually has its new range, whatever its range is going to be someday. Right now, it looks like 200 to 120 seems to be its current range currently. But does it stay like this? Probably not. Will it go higher or lower first? I don't know. Is the new range going to be 100 to 150, or is the new range shortly going to be 180 to 230? I can't answer that question. I can only tell you what I know and what I see and what I'm speculating what's going on and how I'm interpreting how the market is reacting, and we'll see what's going on. Dow is down 138 points. S&P down 27, NASDAQ down 122. I'm looking at this going, this is actually good news. I'll tell you why. I've mentioned it at the beginning of the show. If the markets are down because hedge funds are being called in for margin calls or just bank loans or exposure, credit lines are being reduced, and the hedge funds are just going to lighten their position a little bit to not be as exposed to the market. The broker may not have anything to do with it. The broker's not saying anything to these hedge funds, but some hedge funds are going, I think we're going to deleverage a little bit. We got $8 billion in assets and we got $20 billion in loans, and we're running $28 billion in stock and bonds, and we're going to lower that to $20 billion. We're just going to, on our own, just going to, over the next week or two. That could be their plan. It could be their strategy. And their thinking might be, we don't have a problem as far as we're concerned. We're worried about certain other mutual funds or hedge funds, in particular hedge funds that we know of. Those guys are way over leveraged. We know who these guys are because we know how they operate. You might be getting conservative hedge funds, very conservatively run and managed, who are beginning to take money off the table right now. The Dow is near its all-time high. So is the S&P 500. NASDAQ's within 5, 6, 7, 8%. There could well be a lot of deleveraging happening while we're here. In micro moves, just very small moves are being done, but the big picture is deleveraging is the new normal. This might last a month. It might last a week. It might last 3-4 days. I don't know. But part of this deleveraging could involve the possibility that the short sellers on GameStop begin to deleverage themselves. And that means they have to buy the stock. That's how they deleverage. They got to buy stock because they're short stock, a lot of it. Now, they don't want you to know that they're doing it, so they're not going to do it all in one run in 2 hours and just show you their poker hand that we got nothing. We're bluffing. They're not going to do that. They're gonna look pretty strong, and they're going to take their time making their wagers, and they're going to think about whether it should fold or not. This could mean that the stock just inches along and doesn't show a lot of volume, but the reality is that there are more buyers than sellers, even with this light volume, and that the buyers are actually represented by the hedge funds that need 100 million shares and trying not to let you know about it. I don't know. It's possible. 4.5 million volume now. 4.5 million on the day. That is a light day for GameStop stock. Just as I'm saying. KW McCabe, if a short squeeze on Game began, do you think they would issue shares to stop the squeeze? No. Not really. I don't think the company will issue down here. Maybe eventually at a much higher price they would, but not down here. They're not going to. I don't think so. They don't owe any of these guys any favors. These hedge funds who've been shorting their stock for years, since 2015, at one point 70 million shorted with only 70 million outstanding. These guys have no love for the hedge funds. I mean, even the new management that weren't around 5 years ago, they know. Their friends told them, "Oh, you're joining GameStop? Oh, man, those guys are no one loves those guys. You know, why are you joining these guys?" Well, I'm in with Mr. Cohen. I'm going on to the Cohen factor, and he's got a score to settle on behalf of former management. He has a score to settle, which will take him to the billions in value himself. I'm joining this guy because he's going to make me a multimillionaire because I've got stock options and I'm buying stock in this entity and I'm going to work with this guy for the next 10, 15 years. Watch what we're going to do. That could well be it. Well, we'll still see what's going on. They're saying, yeah, 215, 214. How many years have they been hitting that stock? Unbelievably heavy hitting for years and years and years. Okay. Thank you, everybody. Thank you for using the new emojis here today. Right now, we have 2,800 thumbs ups here. Thank you. 75 on the way down. If we can get 200 more thumbs ups, we'll have a 40-to-1 buy high ratio versus up-down ratio. So if we could get 200 thumbs ups right now, you hit that thumbs ups for a couple hundred. We'd be 3,000 here and only 75 here, 40-to-1. Come on, you guys. Hit that thumbs up. We got 2,900 right there. Another 100 right now, and we're there. Of course, we have 77 thumbs down, so maybe we need 3,100. But come on, you guys, you can do it. You can hit that thumbs up button. You know you can. Who wants GameStop to go to 1,000 a share? If you want it to go 1,000 a share, you hit that thumbs up button right now. You want this stock to go to $190, $200 this morning? Why don't you hit that neat button on the your emoji and pop some knees up here, and we'll just scare the stock into running up to $200 a share this morning, because the niece will completely scare off every bad vibe that this stock has got going. I'm even putting up my niece right now. Here we go. I'm putting them up. There they go. I'm putting them up there. Join the party, pal. Let's go. Get the niece up there. We're going higher. That's all that's going to happen here. This stock's not going to stay down here. 3,100 thumbs up, 79 thumbs down. Thank you so much for these thumbs ups. We get another 100, 3,200 to 7,900. That's 40-to-1. Just keeping that ratio going are really making these thumbs downers angry, because they just can't get leverage on us because there's more of you than these guys. That's absolutely what you want to see. Thank you, all of you, for being there for the thumbs ups of this channel. Telling YouTube to send more viewers our way. Thank you all so much. All right, 182.80 on GameStop. How high can it go? Limitless. When? Anytime. Why? Why not? See, I've answered all your questions. You see what I mean? Talk about how easy was that. Down 109 on the Dow. Down 24 on S&P. Down 100 on NASDAQ. Down 61 cents on oil. That's what we're showing so far this morning. That's what we got. It's where we're at, and I'm sticking to it. And thank you all for being here. Lots of neat logos, rock logos, and I thank you for popping by and seeing me today. Very good. Otherwise, AMC up 17 cents to 1041. Volume of 16.4 million shares. Man, is that quiet for AMC today. Not a lot to talk about there. Yeah, amazing. Just amazing. Tesla down 937 to 609. The Dow is actually down 97 now. And this is near the low of the day. The low was 924, 32,924. We're at 32,965. So about 40 cents off the low of the day for the Dow at this moment in time. But it's not a serious loss. GameStop at 183.30 or so, up 230 a share, just ahead of the break even, not being affected by this market sell-off. But again, I see the opposite happening for GameStop. If the market takes a dip down, GameStop could take a dip up, because it could be a margin call squeeze going on by brokerage firms across the board. And I wonder how many shares, how many trillions of dollars of stock have been not delivered, failure to deliver across the Russell 2000 in the last year. How many are there? These undeclared short sale scenarios. I really wonder about this liquidity thing, about how to increase liquidity, whether it's come at a price where the market just has far too many shares trading hands than really should be. And will this mean that that as the firms begin to squeeze tighten the margin requirements and lift them and restrict it, could there be a squeeze on a lot of highfalutin stocks out there that in reality, is it possible, for example, like Apple is trading right now at 122? Should Apple be trading more like at 170 because of all the failure to deliver Apple stock? Is there a problem to that extent? I don't know. What about Microsoft at 220, at 233? Should Microsoft be 260? Because there's a 10% of the stock out there doesn't exist. It's just trading as a digital artificial currency. I'm not sure. With GameStop, we know we're pretty sure it is a huge problem, a huge problem, and it's 100 million more or more shares that are floating around out there that don't exist. 100 million or many more than that, and the GameStop shares should really be maybe right now at 550 a share, because that's how much money is in the company shares. Oh boy, I don't know. We'll see what this market brings us as we are watching the market, and we're watching for any signs of weakness regarding the trading of bank shares out there. Are there Wall Street bank shares vulnerable to a drop because of hedge fund exposure? We have the headline in the Wall Street Journal: Credit Suisse Nomura face losses from the fund sell-off. And ex-Tiger Asia founder triggers $30 billion in large stock sales. And wow, that is just massive. Wall Street stocks fall as banks warn of losses, coming out of the Wall Street Journal headlines here. The S&P 500 edged lower after Archegos Capital unwound billions of dollars in holdings, triggering concerns that banks who dealt with the firm could face large losses. And it's not unlikely, it might not be that much of a stretch to imagine that maybe dozens of banks dealt with these guys. I mean, these funds, when they get to a certain size, they're welcome everywhere. And certain hedge funds might only have banking arrangements with 3 or 4 bankers. Others love to deal with dozens of banks globally, and they'll play one off against the other. They'll say to a banker in Italy, look, I'd love to borrow another 200 million from you, but this banker in Spain is offering me 200 million at a 0.25% less than you're charging me, or they're willing to lend us. We would like to borrow 500 million more, but you're only offering 200, and the banker in Spain would like to lend us 400 million more. We're not, we got to go with where we're wanted. And so you get these bankers competing with bankers to lend money to borrowers who are playing the game. They're gaming the banks for all the leverage they get their hands on, thereby carrying a larger portfolio to show the banks how big they are. And the banks are going, oh, they only owe us $1 billion. They're managing $35 billion in stock. We only have a 1/30th of the exposure. So they'll use dozens of bankers up to $1 billion or $2 billion each, spread it around with 100 million here, 200 million here, 400 million here, 600 million here, $1 billion here. And they just cobblestone together all this cash that they're now running with globally with brokers all over the world. And everybody wants to be their banker and wants to be their broker and wants to be their friend. And these guys are literally playing them off against each other. As long as this game works, why stop it? And if it's been going on for 5 years, this has been going on for, these guys believe it. These hedge fund guys believe their own hype about how they're actually doing, when in reality, a forensic accountant would walk in there, look at their books after about an hour and go, you guys are so over leveraged, you're in big trouble. You only got $5 billion of actual assets. The rest is all borrowed money. And your investors who've given you money have no idea how little money you actually have from investors. You need more investors to give you more cash. And you've got to pare down your debt load. But these guys are going, yeah, but we're trying to grow our hedge fund, and so we're borrowing to grow it and leverage it up to attract more investors. And it's this, egg before the the cart before the horse is what we're doing. But this won't last long because every 3 months we seem to attract another couple of $1 billion, and that allows us to sort of pare down this debt load against our actual cash on hand load, except when, of course, the Dow has a 600-point drop because of fear of higher interest rates, or a banker contacts this hedge fund and says, we lent you $500 million at a 1% interest rate. It was kind of a teaser, but it's been 6 months, and now the loan is converting over to a regular line of credit loan, and we're charging 2.5% on that. Now these guys are going to try to find a way to get rid of this banker, replace this banker with another banker with a teaser loan of 1/4 point for 6 months or 1/2 point for 6 months before they have to pay the regular rate. They're playing musical chairs with these bankers, and one day it didn't work anymore. And 3 bankers at a time called them up and said, yeah, listen, we got to cut you back by 50% on the exposure, and the interest rate's going up to 3% from 1%. And all of a sudden, these guys can't sell enough paper or raise enough fresh cash or borrow enough fresh cash from others to keep this shell game going. And all of a sudden, they have to start selling stock in the market, which is hurting their portfolio because they're selling stock against stock they own. And they don't want to be doing that, and they're forced to be doing it. And that's where it went out of control, obviously. And maybe this has been happening to this outfit for 3 months already. Maybe this is a 90-day game they've been playing. And finally, last Friday, the jig was up. Maybe that was it. That's how it can go. It can go a long time before eventually the whole thing will just blow up in everybody's face. And the banker realizes, oh, my God, we're way overexposed. We lent these guys $4 billion. And when we blow them out, we're going to be upside down $2 billion. Now we got to chase them for $2 billion. And we've just figured out they owe $12 billion all over the place and another $5 billion over there. And they don't have any assets anymore. They've already blown off their book value. All they got left is stock that's all upside down. And we're on the hook for it. And so is this bank. And so is this bank. And so that's how it goes. And now the question is, well, how many more are there like that? And what are we going to do about it? So, yeah, we'll watch this. What can I say? Gores is on sale, they're saying. Gores Holdings, let's take a look. How cheap is Gores Holdings right now? Yeah, it's at $13.59 off, 48 cents off. Yeah, it's on sale. IPOE is on sale, $16.30. That one will be converting into their deal in the next 2 weeks. It's that close. It might be 10 days from now that IPOE starts trading as SoFi Capital. Watch out. That could be most entertaining. Right now, it's getting lost in the ether. These SPACs are not getting headlines today. What's getting headlines? The Dow 30, the S&P, and NASDAQ, and these hedge funds that are getting blown off. And if there's more than one, that's what's going to get headlines right now. That is the cover story that's going to get the press. These SPACs are quiet little deals that you might be able to move into if you're in the right position to do so. Okay. All right. JJ, Bruce was in the GameStop on the floor. He has experience, so lucky to have his channel. Thank you all so much for your kind words. Let's see here. Short squeezes. I've seen many come and go, but this one here is absolutely unbelievable. It's just nuts. Massive government coverage on these banks and on these hedge funds. Who suffers? The taxpayers, consumers, middle manager? Well, investors in the hedge fund are the first to lose everything. Good morning, Jennifer. And then the brokerage firms that are handling these guys are losing a bunch of dough. And then the bankers of the brokers are upside down. Hedge funds also have relationships with bankers directly. And that's where this Credit Suisse and Nomura banking, these outfits have admitted, I think, $3 billion in exposure already.
I'm wondering about the GameStop exposure. What if the GameStop goes to 500 a share, and there's 30 billion in losses through 200 different investors out there, hedge funds and others? How many banks are going to be on the hook for any of that? I wonder about that. You guys who have stock, you'll benefit. The wealth will transfer to you. You'll be paid out if you sell. But these shorters and these entities that are supporting these guys to this unbelievable extent, this over leveraged GameStop's short scenario, you got to wonder when will that pin be? When will it hit the balloon and it'll burst it? Yeah, I don't know. We'll see. We'll be here. We'll be watching it. We'll see. 182.55 right now, up $1.37 on volume on GameStop now of 4.8 million. That's all it is. Tony Carter, thank you, Tony, for this donation. Read an article about Betsy Cohen and SPACs. Never knew SPACs are so lucrative. Oh yes, they're very lucrative, and that's why I recommend you guys get in these once they announce their deals, like they've been announcing with additional Wall Street backup. You want to be in as close to $10 as humanly possible on these deals, and so yeah, some of these are right around 10, if not at 10. This is where you get in. Absolutely. Hello, Jennifer. How are you today?
Good. The mountains are beautiful today.
The mountains are beautiful today. It was a very ugly night last night.
It was very blustery.
Blustery.
Yes, it was very blustery.
We had snow blowing past our light pole outside.
Semis blown over on the highway.
Semi trucks blown over on the highway. Oops.
Good news is the wildfire, though, in Alberta is under control.
There was a wildfire, a grass wildfire in Alberta that they had to evacuate an entire town for a while. Apparently it's under control again. That's good.
Yeah.
Wind will do that.
Doesn't help when you have 100 to 120 kilometer winds.
Yeah, like 60, 80 mile an hour winds on dry grass with one spark. Problem. Yes, can cause a grass fire in the middle of winter, because if there's no snow cover, it burns.
Yeah.
Go figure. And we've had a dry winter this year pretty well.
But look at this morning. It's beautiful. Smith's Peak is brilliant in the sun.
It's brilliant here because we're in that kind of climate.
We sent that wind over to Alberta.
By the time it got to Alberta, it dried out. That's right. There's no water left in that wind.
That's right.
It's all dry.
That's right.
Oh my.
Are you ready for breakfast?
Oh, I'm ready for a bagel so bad. Yeah.
So bad?
I'm thinking
Isn't the stock up? Do you need a bagel?
The stock is higher, but not enough. I think the viewers are saying maybe it would be good if Bruce had a bagel and the stock would go to 200 a share. That would be a good thing.
Well, that would always be a good thing.
184 is the price of the stock right now.
Okay.
So it's up a few bucks.
Nice.
But I think my viewers are greedy.
Oh.
They're of that ilk. They're showing bagel logos now all over the place. The emojis are showing bagel emojis all over the channel. Bagel bump, people are saying. I'm thinking of fried egg with the cheese today.
Ooh,
yeah,
okay.
Sesame seed bagel.
Okay.
That would be pretty cool. And a little bit of ketchup to dip it in.
Oh, ketchup.
She's not reacting well to the ketchup thing, but you know how it is. Jen and ketchup and eggs. She loves ketchup on her. She loves ketchup on her fries, and she loves ketchup on Kraft Dinner, which I find just impossible to can imagine. I cannot imagine putting ketchup on top of Kraft Dinner. No. I'll tell you one of my favorite meals. Don't get it very often nowadays because we're not in Calgary very often. But when we're in Calgary, we always stop at the IKEA store on the way out of town. The IKEA furniture store, they sell food in there, and they have their IKEA meatballs. You pick up a bag or two of frozen meatballs from IKEA, and what you do is you make Kraft Dinner on the stove. Then you take some of those IKEA meatballs, put them in a bowl, put a plate over top to kind of keep the air in the bowl there. Put the whole thing in a microwave and nuke up the meatballs for maybe 2 or 3 minutes to get them softened. Then what you do is you take a frying pan, you put butter in there, butter, melted butter, and then you fry the meatballs inside the pan, and you just roll them all the time. You keep shaking the pan as they roll over. They get crispy on the outside from the butter. All right. In the meantime, you're making your Kraft Dinner over here. And then what you do is you spoon your Kraft Dinner into a bowl. You then pour the meatballs with all the sauce and butter into the Kraft Dinner, mix it all up,
Serve it. Oh my gosh. IKEA meatballs, Kraft dinner, fried in butter.
Your stomach is still a college student.
I'm in college. I'm 17 years old, 18. I can't get out of it. Is that so good? That is just so dang good. And if you have any like really nice soft white bread, you take soft white bread with melted, really soft butter, and you spread that over the bread, and then you have that with your Kraft dinner and your meatballs. Oh man! In the middle of the winter, that's how you survive winter in Canada. I'll tell you right there, right like that. And if you really play it great, you're using a 2% milk in your Kraft dinner to kind of work the cheese sauce. You're putting butter in there, and then you're putting in not only the cheese, powdered cheese from Kraft dinner, you're putting in Canada Cheese Whiz from the jar. Not the U.S. version. You Americans, you cannot do that. You will not be happy. But in Canada, you use Cheese Whiz, a big giant tablespoon of this stuff. Pop that in there and whisk it all up until that cheese sauce is all creamy and everything. Then you get the noodles, which you've drained, into the pot and mix it all in. Elbow noodles is what you're using. And now all this cheese sauce is inside those elbow macaronis, and then you pour in your meatballs from the IKEA meatball with the butter juice and stuff. Oh man, it's orgasmic. And then you throw on some curling or some hockey, and you've got the Canadian experience with that white bread. Oh yeah, you're in Canada now, Toby. You're not. Toby, you ain't going back to Africa. You're in Canada now, buddy. You're joining the Great White North. Just say it. That's how we roll up here. That's kind of how we like to roll. Big Mike, thank you, Big Mike, for becoming a member and listening to Bruce's recipes with Jen. The recipe corner with Bruce and Jen as they talk about some of their favorite meals in the evening. Oh yeah, that's so darn good. Oh, that sounds amazing. It is amazing. Stop. Nobody eats IKEA in Scandinavia. No one eats in IKEA. Of course not. You're in Scandinavia. Why would you eat at IKEA in Scandinavia? You have Scandinavian food. But in Canada, we're just north of America. You know the crap we eat over here? We eat garbage. And they shove it down at us like you can't believe. So going to IKEA to get their food is actually an improvement. That shows Europeans how sad it is over here. I totally agree.
We do eat poutine, but I don't think I've ever had a beaver tail.
Yeah, that's true. You know, if you go to Disney World in Orlando, they have the Canada Pavilion there, and they have these like little quick fast food guys, and one of them sells beaver tails, which is a pastry kind of thing.
It's fried bread.
It's fried. We don't eat. None of us. I don't know anyone in Canada that eats beaver tails. I don't know where you can get it. I don't know a bakery in this town where you could buy beaver tails. No way. We'd rather have a cinnamon bun or go to Timmy's and have an apple fritter or some of those Timbits or one of our donuts over there. We don't eat beaver tails. No. If tourists eat beaver tails in Disney World to be Canadian, to try a Canadian something. We don't do that. And we also don't generally buy at our grocery store these little candies made of maple syrup with sugar on top of it. These sweets that you can buy at every airport in the world or every airport in Canada as a touristy thing of Canada. People go home to the UK or Europe or Asia with these sugary coated maple syrup candies. We don't eat that. We don't eat. No. We use maple syrup on our pancakes or crepes. In my case, I make crepes. World famous pancakes that I make. We'll do that, but we don't make. But tourists do. Yeah.
I do use maple sugar. So it's maple syrup that's been crystallized into sugar.
Yeah.
Which might be what got it.
Well, that's true.
It's so good.
True.
It's so good.
And for baking and
baking or throwing in your tea or coffee.
Yeah, occasionally, but as an everyday thing, it's not Canadiana to do that. No, we don't do that as an everyday thing. We don't roll that way. Again, Big Mike, thank you for becoming a member. Appreciate it. Also to Sean Sean Schrodel, thank you. I'm up 115% on the day. You were awesome because Jen completes you. Thank you very much. And I'm sure she appreciates the fact that you think that she completes it. She probably does. Thank you, everybody. There's Mike there. Who else is here? Oh, we have Arnie Fryer Arcelis. Thank you for becoming a new member, buddy. Fantastic. John Smith. Jen knows. She knows. Right on. Maple syrups are coming. I like Power Stock. Let's see. Oh man, Jen and I, we love at the end of a typical like Tuesdays and Thursdays, maybe Fridays, Tuesdays, Wednesdays, Thursdays, those 3-4 days during the week, not Mondays because today I do 4 live shows today, 2 here, 2 on my other channel. But Tuesdays, Wednesdays, Thursdays, Fridays, we'll hop in the car after I finish my live shows with you guys, and we'll head for the mailbox and check our mail. Head over to Tim Hortons, grab a coffee. I'll grab an apple fritter. Jen will grab a double chocolate donut, and we head to our favorite viewpoint over the valley in the area here, chomping away and having a coffee and talking about you guys, what you were like today. And then head back into town, and then we go to our grocery store, and we got a couple of them here, and we head into town to pick up whatever provisions we need, and then head her home, and that's a good time. So those of you who have, some of you have been mailing us greeting cards, birthday cards, or just whatever, and you're putting in these Tim Horton gift cards. We thank you. We get to use them here because we have a Timmy's here in town. But some of you have sent us Costco cards, which we love those, but we can only use them when we can go to the States or go to Calgary. We've only done that now once in the last 8 months, but we save them, and when the time comes, we thank you. So. However, you guys are those some of you sending us these gifts. They're just being so appreciated. Believe me, we are using $180 on GameStop. There you are. Maple syrup on ice cream can be done, but I like the idea of making up a. My daughter says that, Dad, you make world famous pancakes, and they're like crepes. They're very thin. Like making crepes, and I'll take some maple syrup, pour it into a bowl, and then put it in the microwave and heat it up, so that when the crepe is done, I'll then grab a can of peaches, and I'll take some peaches and put them on top of the crepe, then take some warmed up maple syrup and pour that on top of the peaches on top of the crepe, and then once in a while we'll take a can of real whipping cream. Sometimes we'll make it real, but usually it's a can, but it's real whipping, not the artificial plastic stuff, petroleum byproduct. And we'll put that on top, and then you got the crepe with the peaches, the heated maple syrup, and some whipping cream when guests are over. And there's your Sunday morning breakfast. And I'm cranking out the pancakes in the kitchen one after the other. I'm making 15 of them, just going, because once they get going, the pan is hot. You got to get the oil in there, and they're just coming out like one after the other. Ooh, that's good stuff. That is really good stuff. Yeah, I think we do okay. I know there's no thin issues here with regard to getting a chill from wind. No. Here we go. Real cream, crepes, peaches, maple syrup. Oh yes. Cooking with Uncle Bruce. I think the problem with that would be is that I'd be eating so much on the air that I'd blow up to about 300 pounds. And you don't want to see a 4'8" guy, 300 pounds. That would not be good for. Well, that could be interesting for views. No, I don't think that would be good for views. I don't think so. Big Mike is saying, I'm saying that GameStop will do nothing, and Bruce is just going to talk about food all day long. That's what I'm saying. Here we go. Bruce, keep showing us how to shake up the cream. Today on Cooking the Books with Uncle Bruce, laugh out loud. Oh, here we go. Look what's coming down the highway.
Your egg's a little soft.
My egg's a little soft.
Yeah, it's a little soft.
What are you trying to kill me?
I guess.
What is that?
Yeah, little salmonella is good for that, right?
Yeah, you've had a good life. There we are, the bagels.
There's your napkin.
I guess my days are numbered. Whatever happened to Bruce? Well,
right. If you don't see him tomorrow, you know he's in the bath.
Yeah, he was.
Sorry, Canadian washroom.
Washroom.
We're in the washroom.
We're in the washroom. We don't even call
you
them.
You guys are in the restroom.
You guys are in restrooms in the U.S. That's true.
We actually wash in ours. We don't just rest.
We don't just rest.
We don't have the pause.
No. I don't powder. No. I don't do any powdering in the powder room. I do my business and that's it. Cheers to all of you from Stock Markets with Bruce, Uncle Bruce. I'm having my bagel. We're 179.15. Is that right? 179.15. I'm starting with a low price. Let's see what happens. Oh yeah. Nothing yet. We're all good. Okay, GameStop. Let's run this market. Oh boy. Bruce and Jen could do a relationship channel. The business room, I like it. But damn, that looks good. I'm so hungry now. This is good. We got real cheddar cheese, ketchup, fried egg, sesame seed bagel, toasted. So the sesame seeds have that roasted smell and taste. Oh. Yeah. So good. Oh, man. Fried egg, cheese, butter on the bagel. With Bruce's shows could be the new for dummies. Let's go. I could watch Bruce watch reruns of Seinfeld. 180.74. We're up $1.50 on the stock. Oh yeah. So nice. Let's see what happens. Oh man, there should be illegal. Butter, she wrote. When Stock Markets with Bruce channel replaces GMA, you know that my Jen also sees the way. Keep it up, Bruce and Jen. We're up $2. Well, we're back to 179.61. Let's hope for a run here. How about a little pop there, GameStop? Take a shot. Oh, yeah. IPOE, people want to know. Well, it should be closing its deal in about 10 days or so. I think it'll be listed in like not this week, maybe next week. It could be listed already. Oh yeah, IPOE is very close to the merger with SoFi. Will work for bagels by Jen. What's your favorite album? Oh man, favorite album. Yeah. All about your mood. All about your mood. So Led Zeppelin 4, but no Stairway to Heaven. Band. Beatles anything. Boston, the original album that Boston released. Unbelievable.
Ohio Players.
I loved Ohio Players in '74. Oh gosh, Avalon. Roxy Music album, Avalon. More Than This, the song More Than This, extended version. You want to hear a really cool song on YouTube, you look up More Than This by Roxy Music, extended version. There's some 7-8 minute long ones. Awesome, just so good. Doobie Brothers, Captain and Me. What an album. Wow. 74, 73, 74. Wow. Music, man. Oh, man, I love music. Nick likes Rush. Not a Rush guy, but yeah, we were bombarded by it all the time up here because it's Canadiana.
Tell about CRTC.
Yeah, the CRTC. Oh man, we Canadians, we those of us anyone still alive my age, we have suffered for decades. We had to suffer the CRTC. Even now, we still have to suffer. Because
Canadian Radio and Television Commission.
Yeah, the Canadian Radio and Television Commission, because they regulate how much of a percentage of the radio you get to listen to has to be Canadian content. So we get Gordon Lightfoot up the wazoo forever. We'd get Neil Diamond, Shania Twain, Celine Dion. We'd get Rush. We'd get April Wine. I mean, it would be nonstop, always nonstop. It would just be horrendous. Then when the internet showed up, we could listen to radio stations from the United States. Oh. Man, that was nice. It was so nice. But I mean, in the 70s, I'm in my late teens, mid-teens, late teens, my 20s. Oh, the suffering we had to tolerate. All that Canadian talent. And these had a playlist. They had this, I was just nonstop. It was the same thing all the time. It was just, the worst. The worst. Canada. Saving our culture by making us sick of it, by shoving it down our throats, saving our culture, where we could just get out. And we were so happy. You rent a car in the United States. You're in LA. You're renting a car. And one of the thrills for Canadians was just hitting the search button on the radio dial. And you're getting all the kind of music, just all kinds of radio. Oh, we loved it. Loved it. But things have changed with radio, haven't they? It's so different now. Oh, man. Springsteen concert. Tom Waits. Yeah. Billy Joel. Oh, no. Nickelback. Oh, no. No.
Not from Alberta.
The Hip.
Yeah.
Bieber. I'm getting hungry. Could eat a Monopoly. I love April Wine. Well, we loved it for about a year. We loved April Wine from about 72 to 73, but then we had enough. Yeah. Oh, my. Here's a good question. Robert wants to know, what do you think it's going to take, Bruce, for the DTCC and ACC to get the failure to deliver and naked shortcoming under control in general in the overall market? It could well be as simple as they don't have to do anything. It might well be that the banks will do it for them. It could well be that if a number of other hedge funds are going to be liquidated out as this week rolls along, other nightmares pop up with other hedge funds, the shell game is getting exposed, over leveraged. It might be the banks that call it in. That could well be it. I don't know. When momentum goes one way, it really goes. And if there's going to be a short squeeze or a, failure to deliver squeeze on GameStop coming up, it could be bank led. It could be bank driven. that just forces shorters to cover it because they can't borrow stock anymore from anyone else because everyone's borrowing it from everybody else. There's nothing to borrow. 70 million exist, 210 million out there. How's that going to work? Its stock's going to go up. Now, if I could tell you the timing, and I could guarantee you the amount, of course, if I knew it, why would I tell you that? I wouldn't even tell you that. I wouldn't even be on the air. I would be directing trades from somewhere if I knew all this information. Oh boy. Unfortunately, the stock is down $2. 177.40. It was 179.30 when I started this bagel. 176.60. That appears to be what's going on at the moment. Oh man, so good. So good. 176 though. 175.65. There might be hedge funds that are betting against me on my bagel, going, whenever he eats a bagel, we'll short some more and we'll drive it down, make him look bad. I don't know. Could that be what's happening? Le dip, le daily dip. Come on, baby, go down. Laugh it out loud. Works for me. I buy. Too many hedge funds get margin called. Could this cause a market crash? Yeah, correction, a dip. But again, there's buyers and sellers, and there are hedge funds out there who don't do anything on margin. They just use cash, and there could be hedge funds picking up deals on all kinds of stocks that they put away for a year or two and just score unbelievable touchdowns on. That can happen. That happens all the time. Watch this. AB. Wait, what? Canadians are jamming U.S. radio signals like the Soviets and the Chinese did? We weren't. No, we weren't. We can hear your stations up here, depending on the time of night and what kind of receiver we have. And I remember in the 70s and the 80s, especially in the late 60s and 70s, when I was about 11, 12, until I was about 15, 16, I would have my radio on in the evening in my bedroom, where it would be like, 10 at 11 at night, and I'm in the basement. I got my radio on, and I'm listening to the Voice of Labor from Chicago, AM radio. And I'm listening to some of the greatest Motown hits that just kept coming and coming. Oh, I love that music. And but we can only hear the Voice of Radio in our area in Kitchener-Waterloo, Ontario, in the evenings, because at that time the signal either was amplified or could reach out and would have less interference, and it would reach Kitchener, Ontario, Waterloo, Ontario, where we were. And I would be listening to these U.S. stations. I would listen to Buffalo stations that would come in. And occasionally we'd get Cleveland across Lake Erie, but Detroit. But I could get Chicago, which would be 400 miles away. But the signal was so powerful that it would carry all the way over. And listening to the ads, the Chicago ads. I don't remember specifically anything anymore because this is back now, and this is now, oh my gosh, 52 years ago. But the music, yeah, no, I love to hear the music. And Smokey Robinson and the Miracles, and Stevie Wonder, and the Supremes, and the Box Tops, and Marvin Gaye, and artist after art. Oh my God, we'd only hear maybe 1/10 of that music in Canada. Maybe 20% of it we'd get up here, because we had to have 60% airplay for Canadian talent. 60%. of airplay for Canadian talent. So you're listening to these Canadian groups that are hopeless. They can't get a top 100 hit in the United States. But up here, oh, we got to listen to it because the radio stations were audited by the CRTC. And we teenagers complained. No one gave a damn because the CRTC was a political body run by politicians in Ottawa. And they wanted to protect us from that American culture that'll take over our lives. Like, geez, you guys. Of course, we would then hear the Guess Who on American radio, and we thought it would be cool. We'd hear that, we go, that's cool. They're playing the Guess Who in Detroit because the music was that good. That was the only way we knew if the music was any good. If our music was any good, it would be played on American radio. If you couldn't hear, you rarely heard April Wine on U.S. radio. I mean, the Stampeders. You never heard the Stampeders on American radio. But up in Canada, we were drowning in Stampeders bubblegum songs. Oh, it was just terrible. Oh, it's just the worst. And we'd go to a record store and we'd buy the British imports. We'd buy the American bands. Canadian record sales would be so-so. And then the radio stations would try to do promos and giveaways, and we wouldn't phone in for the Canadian stuff. Or a 10th caller, you get a prize. Then you find out what the prize is. Then it would be a Stampeder album. You go, oh, great. Yeah, we weren't all that impressed. 177 to 178 on GameStop coming back on again. But what can I say? It was the time. It was that time, and in those days too, back in the late 60s and 70s, Hollywood had not yet figured out that if you were to put top 40 music into movie soundtracks, you would get a massive amount of young kids going to your movies. And that hadn't come together yet. It was only the occasional time you'd hear something like that. Where if you're listening to Forrest Gump, you watch the movie Forrest Gump and you buy the soundtrack to Forrest Gump. I mean, it's the soundtrack of the 60s and 70s. I mean, it's unbelievable. But the royalties that had to be paid now are just so insane that now it's not being done because it's too dang expensive. But back in the 60s, you could have easily picked up tunes from top 40 artists for pennies on the dollar. And then Forevermore had that going, but they didn't put two and two together at that point in time. So, yeah, what can I say? As far as concerts go, I saw a few concerts in my time, but not many. One of the most memorable concerts I remember was Rolling Stones, Maple Leaf Gardens, 1974, with Billy Preston as guest musician. Yeah, that was a show. 2.5 hours, something like that. That was a show. Matthew, thank you for the donation, buddy. Appreciate it so much. We were in my buddy and I had 15 rows up on the side of the stage. So we were down at the one end of the stadium, the hockey rink, Maple Leaf Gardens. So I could look to my right, and I could see the whole audience and the entire arena with the seats way up there and behind me. And then over here, we could see the end, the end here, and the stage was right in front of us. And the guys were pointed this direction. And there were many a time where Jagger is just walking around all over the place, and he's coming to the side of the stage, and he's pointing at us, singing at us, and he's like 25 feet away from you. There's Mick Jagger in his prime, just right there. It was just thrilling to see that. What an act! They had it down, man. They had it down. Billy Preston, unbelievable. The first half of the show was okay. It wasn't like incredibly great, but it was okay. Then Billy Preston did a 5-song set of his stuff with the Rolling Stones as a backup band for him. Blew the house down. I mean, the whole arena went nuts because Billy Preston was energy, man. He was the fifth Beatle, don't you know? And then Mick Jagger came out for the second half of the show, and they turned it on. They just turned because they had the crowd was going now, and then they just pumped it up with energy. And the second half of the show was just wow! It was great. Yeah, that was a cool concert. But that was then. This is now. Here we are. Anyway, there you go. Thank you everybody for asking. And to already Cooking with Bruce, Concerts with Bruce. This is why I subscribe. This is why I'm here. Anyway, whatever can I say? Don't forget about Rush. Oh man. Oh man. Oh man. Bruce, what's up with burgers in Canada and the restaurants wanting to smother them in mayo? What's that all about? I do miss a side of brown gravy with all my fries. Oh my God, it's good. Well, it depends on the burger place you go to. I guess. I mean, McDonald's is McDonald's, Wendy's is Wendy's, Burger King is Burger King. That's all the same. But if you got some local places to go to, they have your unique burger makers, I suppose. And then of course we have our favorite local restaurants here and there, depending on what chain you're dealing with. But there aren't that many pure Canadiana fast food outlets. I mean, Tim Hortons is really the one. I mean, that's kind of Canadiana, but it's not owned by a Canadian anymore, I don't believe. But yeah, it is there coast to coast, boy. I'll tell you that. I want to be back in the 80s and 90s again. Thanks for coming to my TED Talk. 50's the new 30. Gravy is life. Stock is 179 right now on GameStop, 179.10. Let's see. Mick Jagger hates GameStop. So how about that stock? Oh Lord, I can't imagine why Gravy would be a pool pump system to do a pool pump system. Harvey's, Harvey burgers are good. Yeah, Harvey's, that's Canadian. Harvey's is definitely Canadian. That's true. And that's where you order your burger, order a cheeseburger or whatever you want. They prepare it. And then when the burger's done, they call you up and say, number 44. And you come up and they say to you, you're behind the counter. And they have all the ingredients, all the add-ons behind the glass counter. And they go, what do you want in your burger? And you go, I'll have some mustard and mayo or not, or maybe ketchup or not, relish, onions, peppers, jalapenos, pickles. And I mean, it's just like, I don't know, 8, 12 different things you can pick away. All you want or none or just one thing or however you want it. Yeah, that's pretty good burger. It's a charbroiled too. So yeah, it's a charbroiled burger. Yeah, it's pretty good. And the fries at Harvey's are usually pretty good. They're well done fries, pretty good. Yeah, crispy. Kind of like it that way. Yeah, they've been around since the 60s, 50s. Harvey's. Yep. A&W. I'm not sure if A&W is a Canadian firm that became American or American that Canada came to, or it was Albert and Walters originally. Albert and Walters Root Beer Company. In Canada, they used to be just drive-ins. You just drove your car, and then the gal came by and took your order. Those were the days. Another life, I guess. Anyway, what can I say? Here we go. Matthew, what do you think? Does retail really own the available shares? If so, what happens if the stock is oversold on the retail side? Never mind the shorts. Will GameStop create more availability? Well, I'm of the opinion that of the 70 million shares that exist, we know 20 odd million, 25, 26 million are insiders. And then we were told 130 million or 160 million are held by mutual funds, pension funds, ETFs, and index funds. And then there's the public that holds stock, the small investors. So you add all that up and you're at 200 million shares. And then you add short positions and failure delivers, and good Lord, how many more there are. So how many shares do small investors really have is the question. I would have said back last summer, I would have said 5 to 10 million shares would have been all they had at that point. But today, I would think that with all the shares existing and outstanding, I would say now small investors could have up to 50 million shares. 50 million. And the only way you're going to get those folks to sell this stock off en masse, you're going to need to run this market to 500-600 a share to really get most of it. And even then, and it depends how fast you take it there. If it inches up $10 a day for 35 days in a row, it's a $350 gain kind of thing. You're now at 530, 430, 530, whatever it is. You may have gotten 2/3 of all of that. Maybe by then you got 2/3 of it, but that's still only 35 million shares out of 100 and something million share short position. That doesn't solve the problem. It helps solve it, but it doesn't finish solving it. So if the shares go up to 600 in like a week, in just 1 week, they run up there, and then from there they hang around 600 to 700 for a week or so, and then they slip back to 400. You might shake out 3/4 of all those people because they're up so much money that they're afraid it'll come back down again like before. They'll want to you'll shake them out. But the longer it stays up there, the rest won't sell now because now they're getting used to the new normal. And so it all depends how this whole thing is played, I guess. Anyway, unreal. Carrie, I was in Montreal and you could call Pizza Hut and get pizza and poutine. Brilliant. Yes. What can I say? One of the best Disney restaurants, Le Cellier Steakhouse Dining, located in the World Showcase at Epcot. Right on. Mick Jagger was the seventh Beatle. Oh, okay. Let's see here. What's this here? Observe thyself. Reddit is putting a lot of out of work DJs to work again. Founded a couple of weeks ago. That's interesting. What else is coming through here? Tons of comments. Thank you, everybody, for being here. Dang, Bruce. Some of your videos on Traveling with Bruce have some serious views. Multiple vids with over 1 million views each. Well, I've been around 3.5 years over there, and there's a following. I paid my dues to build that channel up, and so yeah, I got lucky with a couple of good videos. It's been kind of quiet lately though, with not much happening, but hopefully we'll be cruising sooner rather than later. Five Guys burger and fries, pretty darn amazing. Gravy, Homer Simpson impersonation. Bruce is a rock star. He doesn't even know it. Poutine is the truth. Let's see. As soon as Bruce is off the air, I'm going to Five Guys. This is killing me. Let's go Citadel. Let's go. We had an A&W drive up in Minnesota when I was a kid. They were awesome. Impossible Burger. Let's go. What else is here? Thank you all for being here. Okay. I believe that game will be up in early April, and these folks are going to get margin call, liquidate all the shorts and deliver what shares they can. Then failure delivers will hit, and all heck will break loose. You could be right. That could well be the pattern on this thing. It's going to be a chain effect, one after the other. I'm not sure what this means. Morning, all. Uncle Bruce, I don't know if you've answered this already, but what can you explain about how share recall works? Would that be a good option? I don't know what that means. I mean, I don't know what that means. All I know is that back in the day when we were dealing with physical certificates, the end of every night, every brokerage house had their accounts of what they owned in stock. And once a year, we had to do our audits. Every quarter, we had to do our reports. So every year, a brokerage firm would have to go to the Canadian Securities and Exchange Commission, or our provincial entity, and we'd have to provide our audited financials. And our audited financials would include the share counts of certificates in our vaults for all of our branches. So if we had a vault in our branch with stock certificates in there, we had to have those audited on the end of the last day of the year. Then anything in trust in our brokerage houses, or any of the certificates that were at the transfer agencies being broken down into smaller allocated amounts, we had to show the regulators what we held, how many shares of what we held of what companies, cash on hand and IOUs and everything else. And then we as a firm had to be capitalized to be allowed to stay in business. We couldn't be undercapitalized. We had to be fully capitalized. So that was a big deal. A year end for our firms was a big deal. And in the last 2 weeks of those months, when we knew the end of June would be the end of the year, let's say, from June 15th to June 30, we had the hammer come down on us from compliance in Toronto, head office. Compliance would be all over us. And we had to make sure we didn't have any outstanding positions, or if we had any clients owing us money, we had other assets to cover it, or whatever we had to do. I mean, we had to really double down our efforts. And there were some of my brokers that would be denied trades. I mean, I'd have a list of accounts that my desk trader would know. I can't accept a trade. That broker over there, he's got 5 clients that can't buy stock unless the manager, me, approves it. And this guy had 2 accounts. This one has 6. This one has 1. This one doesn't have any. And so my desk traders would call me up and say, I got a buy order here for $20,000 worth of stock, XYZ, whatever, at $1.30 for client so-and-so. And I would look up the account of client so-and-so, or I'd call my compliance officer at the back of the shop and say, so-and-so wants to buy stock. What are your thoughts? And he'd say to me, no, he's fully margined up. He's fully margined up. No can do. And then we'd tell the broker, can't accept the order. And the broker would call the client. And the client would say, I'm bringing in a check. And we tell the broker, if he walks through the door with a certified check for 25 grand, we'll take the order. Otherwise, we're not taking the order today. And the order will just sit waiting. Anyway, the end of the year, we'd have these audits and everything would have to work out. And so recalling the shares, we knew exactly what stock we had of which company and how many shares for all of our accounts across the country. And it was because we had them in physical form. We had the actual pieces of paper of the certificates. Today, it's all electronic. And the electronic thing is more convenient. It's faster, and you don't have as many employees to handle the trades. But it also there's also been a lot of loosening up of the rules regarding non-delivery of paper, and that is a whole different ballgame that didn't exist. There was no such thing as owing. You had to owe stock to a clearing company. No such thing. There was never. You're in default. You're in default of the transaction. This is not an IOU. You can't carry this. No, you're bought in. It was game over. And no brokerage firm would ever go to the clearing company and try to clear a transaction without having the certificate or a check. I mean, you either have the stock or you got the money. Otherwise, don't come here. There's no way. And if you don't show up to do your transaction, you're in default of the transaction. And that could put your brokerage house in suspension. I mean, they padlock your house. So that never happened. It never. There was always delivery of certificates and or cash. But that was then. This is now. And today, it makes no heads or tails sense in some cases how many gazillions of shares are owed by this house to the clearing houses. It's endless. It's just ridiculous. So yeah, that's a whole different ballgame. I got to get off the air. It's 3 hours, 11 minutes. You've been keeping me on for too long. I'm having too much fun with you guys, though, I have to admit. But I want to thank you for being here today. Thank you to all of you who've joined this channel today. A whole bunch of new joiners. Jacob, morning, all. Uncle Bruce, I don't know if you've answered this already, but share recall. Yeah, I've answered it. All right, we just did it. Well, thank you, guys. I'm going to be on this afternoon at 3 o'clock Eastern for the second show. That's 1 hour before the close until 1 hour after the bell. And we'll see what happens. GameStop, 179.30, down $1.30. Not a lot to worry about here. Or is it 177.36, down $3? Not a lot going on. Been in a very tight range most of the morning here. We'll see how it goes from here. But thank you guys for seeing me. The Dow is down 77, S&P down 17, NASDAQ down 127. They're down a little, but they're not down a lot. No new blow-ups that I'm aware of on the market, so we'll keep an eye open for that. And we'll talk to you about it at 3 o'clock until 5 o'clock Eastern time. Thank you, all of you, so much for coming by and seeing me. And thank you for the 3,400 thumbs ups. Those of you who've given me thumbs ups today. We have 105 down and 3,400 up. So we're about a 34-to-1 ratio. It would be awful nice if a few hundred thumbs ups would come in right now as you guys are shutting me off to pop that number up a little bit, closer to that 40-to-1 ratio we had earlier. But I'll see you at 3 o'clock today, and we'll keep you posted on what's going on with the markets and what's happening with these shares. 6 million shares at GameStop traded. It is a quiet day today. We're now at 178.46. So we'll watch it, see what it wants to do, and then find out the last hour as we await the next big thing, which is month end, Wednesday afternoon. Day after tomorrow, the quarter ends. And there we are, 3,600 thumbs up. Thanks, you guys, for popping me up to 3,600 just like that. That is beautiful. Thank you so much. All right. Well, there it is. I will see you this afternoon at 3 o'clock Eastern. Thank you for being here. Thank you for all of your comments, donations, memberships, and questions about music and concerts, everything else. And we'll catch you this afternoon at 3 o'clock. All right. Take care for now. This is Bruce saying stay healthy, stay warm, stay safe, make lots of money. And we'll catch you later. Bye for now.